good for Q1 or Q2 GDP because capital spending, which we know outside of AI-related CapEx, is only growing about 3% in the United States. I think second point about tariffs is that this new reciprocal tariff announcement is in its objective very similar to the border adjustment tax proposal that back in 2017, border adjustments were paired and symmetric, which essentially sunk Paul Ryan's congressional leadership in Trump's first administration. Moreover, the problem with Trump's imposition of tariffs is that it's another encroachment of executive power on the authority of Congress. I mean, it used to be the tariffs were legislative, highly debated, deliberative. What we're seeing right now is, two things from this movement towards border adjustment tax, rather than it being a national emergency or security that could be made with steel or aluminum, is that they're going to be subject to challenge in the courts. Not to mention that the lack of deliberation in Congress makes almost every evening for us, potential market and moving event, depending upon the latest tariff proclamation from President Trump. It makes all of our jobs more exhausting, as we all could appreciate.
Which then, based on that, is it a situation of just buy the dip? Because if there's any strong negative reaction to these broad tariff risks, but as you say, a border adjustment is very different than like these broad sweeping tariffs, and it seems like hedge funds and retail continue to decide to buy at the dip. What do you think?
I think the big problem with that is that the high and immediate tariff approach that President Trump is bringing to bear in trying to bring offshore U.S. jobs back to America is problematic, because before you can protect industries, you first have to have them. I mean, for example, if auto assembly relies upon parts made in Canada or Mexico, a 25% rise in parts could mean a slowdown or shutdown in an auto assembly plant, resulting in U.S. unemployment. The disruption during COVID highlighted how badly we gutted American industrial output in a lot of products. And Scott Bessent, people forget, he originally pushed for new universal tariffs on imports that started only 2.5%, and then rise gradually as we build up the industries to replace things that we don't produce at scale anymore. And apparently this was rejected by Trump. So despite the mixed inflationary impact historically from tariffs, it's hard to see how short-term, tariffs won't contribute to both inflation and potentially economic slowdown, which could be problematic. So buying the dip, today looks smart, but we'll have to wait and see how this all plays out.
Do you expect any sort of forward trading volatility fueled by this global tariff uncertainty? Do you see any areas for opportunity or any areas that you're shying away from?
I think right now the market is broadening out. We're seeing equal-weighted S&P outperform away from the Mag 7 simply because the spread between earnings growth that's being reported between the 493 companies and the Magnificent Seven has narrowed, even though it still remains quite significant. And as you mentioned before, at the outset, concerns about CapEx spending being excessive, given the DeepSeek news that we've seen over the last couple of weeks. So I think where we are today is that, the best strategy and what we're doing in our funds is, one, we have a dedicated infrastructure fund, which is really leveraging off of the opportunity set that we see. But in our American fund, what we're doing is essentially continuing to barbell the Magnificent Seven with a hedged exposure against the Magnificent Seven with what we think are idiosyncratic ideas like in healthcare, biotech, and other areas which would be less impacted by disruption in global trade.
Right. So you can't not own them, but you need to also have exposure to other things. Last question here. Fed Chair Jay Powell, front and center in D.C. on Tuesday and Wednesday, testifying to Congress, first the Senate, then the House. What's the most important thing for you to hear?
Stability. I think Fed Chairperson Powell has done a very good job. He's trying to bring the country back to a monetary policy which existed prior to the global financial crisis, which is, real interest rates around 2%, current, Fed funds rate, which is consistent with the, pre-GFC environment. I think people of the past generation need to go back and look at essentially what the interest rate dynamic was before we had a period of time when interest rates were essentially zero for a prolonged period of time and the disruption that caused. So I think stability from Chairman Powell is a good thing, and that's something that markets should essentially reward.
say less, I guess, basically. Hey, James, really appreciate it. Thank you so much, James Abate, Managing Director and Chief Investment Officer over Center Asset Management. Some individual stock stories that are quite interesting to track is TD Bank seeking to raise about $14 billion in a Schwab stake exit. They want to get rid of that entire stake in Charles Schwab. So we wanted to get more on this with Paul Goldberg, Bloomberg Intelligence Senior Equities Analyst. Paul, what did you make of this? Like, why would they do this? Is this just strategic or is there something else going on?
I don't think it's necessarily strategic, Alex. I think it's partially to simplify the business. Also, TD got hit with AML investigation and was fined and got an earnings cap, got an asset cap in the U.S., so they can't really grow in the U.S. much larger on the banking side. It sounds like they're trying to simplify the business, have an ability to buy back some stock, have some extra capital on hand.
Where does TD's business currently stand if you were to give us a broader perspective? How is it lining up against competitors?
Well, I think that you have to look at it in two different areas. One in Canada. So in Canada, they're one of the largest banks across personal and commercial banking. In the U.S., they, again, one of the largest banks, but they're very much personally focused all over the East Coast of the U.S.
So what is it going to take for them to get their asset cap raised in the U.S.?
I think it'll take a long time.
But what's the problem that the Fed highlighted?
Well, the Fed highlighted is the AML deficiencies, which they're trying to fix. It costs them a lot of money. They invested in it, but it can take years. So if we'll look at what's happening to Wells Fargo, we're in 8 years, and they're still trying to get out from under that.
Yeah, and it always seems like nebulous. It's like we have an asset cap, but it's not like you check these 3 boxes and it's gone. Right. It's sort of like, well, at least for Wells Fargo, because it's like risk management, it's controls, it's making sure that everyone's on board, doing the right thing at the right time, which can be very difficult.
What do you take away from this idea of the repurchasing of its stock?
For TD or for Schwab, they're both kind of doing. So for TD, I think they're repurchasing only a fraction of that. So the stake in Canadian dollars is about 20 billion. So that 14 billion, they're repurchasing only 8. So the impact on TD shares from the sale of Schwab shares is about 7% of the earnings. They're going to repurchase back 6. So mostly neutralize that kind of impact. The rest is going to add about a whole point of capital to them, so that they can reinvest in other sides of the business, but because they're kept in the U.S., which makes it very challenging because they'll have to figure ways to reinvest it either into capital markets, which they're doing right now, or domestically. With Schwab, they only buying 1% of the 10% stake that's being sold, but TD is still keeping the depository relationship, so I think it's strategic more on the TD side rather than having any impact on Schwab side.
Is this bad news for the Schwab side of things?
I don't think so. That's what I'm saying. It's a strategic decision on TD's side to simplify their business. They're still keeping the deposit relationship, which clearly says that they're working well with Schwab. And TD is going to book a decent gain on sale and this kind of thing. So I think there's nothing wrong with the Schwab. It's just big stake of the company is going up in the open market.
Right.
Totally switching to TD and their actual Canadian business. How are they doing there?
They're doing pretty well, right? So the second largest bank domestically, right after the RBC. They've been very consistent, right? On the mortgage side, on their commercial operations and everywhere. So they've been doing well, but it's an extremely competitive market. That's why the concern is that they're going to have this all extra capital that they're going to try to reinvest domestically into a super competitive market.
And breakdown in Canada, there's fewer banks than we have, 1 million over here. So like, how do they shake up in terms of their competition in Canada? How do they line up there?
Well, their competition, their 6 largest banks, or some people call it 5+1 because National Bank is a little bit smaller, even though they just finalizing the closure of Canadian Western Bank that's going to expand them a little bit. But some people describe that market as a competitive monopoly between these banks. So there's some smaller banks and credit unions, but these banks control 90+% of deposits and loans in the country. So very, very concentrated. And they compete very aggressively against everything. So the market shares, when you see them shift, we're talking about basis points here and there from period to period.
All right, Paul, really appreciate it. Thank you very much. Paul Goldberg, Bloomberg Intelligence Senior Equity Analyst, joining us on TD Bank, selling off its stake in Charles Schwab. All right, coming up next, I'm really looking forward to this conversation. Some of these commercials yesterday really confused me, particularly the head with the cowboy hat. I didn't understand.
The seal one was interesting.
Was really weird.
I was a little freaked out.
Also, when the eyebrows flew and then also mustaches were flying, like both those were a little upsetting. We're going to break all that down. We're lucky to get Mark Douglas, president and CEO of Mountain, coming up next on all the ads from last night. This is Bloomberg Intelligence.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You have 8 of the 11 major industry groups in the S&P 500. They are higher right now, and it is information technology that's in the lead. You have NVIDIA, Amazon, Microsoft, Broadcom, Apple, the individual leaders in terms of the index points. McDonald's best performing stock in the Dow Jones Industrial Average, up right now about 4.5%. Growth in their international business made up for a decline in the U.S. sales. They have gold at a record after President Trump announced those tariffs on steel and aluminum imports. But Dennis Gartman at the University of Akron Endowment, talked to him earlier today. He's worried the price of gold has risen just too far.
I remain long-term bullish of gold, but I think in the short term we've seen too many people who had not been bullish join the camp, and I'm a little concerned about the fact that we are rising as sharply as we have this morning.
COMEX gold $29.37 an ounce. That is up about 1.7%. S&P 500 41 points higher. That's up 0.7%. 6,067 on the index. The Dow Jones Industrial Average 95 points higher, and the Nasdaq 100 right now 293 points higher. That is a rise of 1.4%. Oh yeah, Coca-Cola's Fairlife milk brand has become its fastest growing U.S. brand. $1 billion in retail sales in 2022, and it's crucial to the growth strategy for Coca-Cola.
Interesting.
I didn't know they had milk.
I didn't know that they owned Fairlife. I actually just got into their protein drink, and I can't find it anywhere anymore.
That's because it's just flying off the shelves, I guess.
Must be.
I drink almond milk. You're talking to the wrong gal.
Love almonds.
Yeah, I know.
Why does that not surprise me?
It doesn't surprise you, does it? Yeah. It really helps with that heavy milk feeling.
Very on brand for Alex.
JT, appreciate it. I'm Alex Steele alongside Norma Linda. Paul Sweeney is off today. So I've been thinking about it all morning and talking about it all morning. The weird display of Super Bowl advertising, like, yes, the Nike ad, I got it. I got chills. You want to pull my heartstrings?
So
pull them
good.
because you did it really well. But there were other ones that were highly confusing. This Pringles ad with the mustaches flying around. The Caesar Pizza ad with Eugene Levy's eyebrows flying around. I don't know what that was. Facial hair in flying. So we're going to get more on this with Mark Douglas, President and CEO of Mountain. Hey, Mark, do you share my confusion, or can you help me understand?
Yeah, I mean, I thought 2025 was the year without humor in the Super Bowl ads. I think every attempt at something funny fell flat. And since the brands couldn't sell a joke, I thought the brands that actually just went back to selling their product did the best. So they were brands like Poppy, which is the soda, had multiple really big TikTok, stars in it. I literally bought the product after I saw the ad. I thought, oh, that sounds good. I'll just order that right now. I thought Fed, GoDaddy. It was kind of like back to basics is what I think did well during the Super Bowl. And the big productions just, they just weren't funny at all. So
I'd agree with you there. I was really trying to find the humor in a lot of these ads, and I was trying to do this thing where I would watch the ad and then try to guess which company
that's fun.
It was. And one that confused me, actually, that I didn't realize until the end was the ChatGPT ad. And OpenAI spent $14 million on the Super Bowl debut. And of course, if we think about this on the back of all the concern that's been recently coming into play with DeepSeek, just how important is it for companies as of late to do advertising on a broadcast format or a streaming format?
Well, if you have a product that you want, I mean, you're not going to get a medium or a moment where more people are watching. But I think a lot of these ads, I think they felt like they're made for bars. Like they assume you can't hear the sound or something like that. But most
which is where Nora found herself.
That's where I found myself.
Yeah. So you just see which celebrity decided to take a paycheck from which brand, and then you make your decision from there. But I agree. The ones that did do pretty well, there was an ad where the whole stadiums were singing "Take Me Home," which is a famous John Denver song. That was the one that kind of I felt something from. It wasn't an attempt to be humor. It was just an attempt to make you feel something watching the commercials. I thought those did reasonably well.
And I started singing along.
Yeah, you did?
I did.
Oh,
Take me home. I was singing it.
Okay. But then we're here on a Monday and we're all talking about the stuff that, confused everybody. The dude with the cowboy head was really confusing it. I saw it multiple times and I'm talking about it. So if the fact that I'm talking about it, even if it was weird, doesn't that count as a win?
I had mixed feelings about that. I actually liked that.
You had mixed feelings?
The only one that got a smile out of me. So I thought, and that was a Tubi ad. So I also remember, it kind of was effective. I remember. I hope it was Tubi. I just said
no, it
Tubi.
is. You're right. You're right.
Right.
Yeah. I mean, it made me feel, like it made me remember it, like you said.
Was this a great year for Tubi? Just the fact that so many people were going there off of the fact that it was a free place to watch the Super Bowl. Was it really important for them to spend money on ads to get people to actually tune in?
Well, I mean, I don't think it's ever, I'm stuttering to give you a response, because a lot of these ads are like 3 minutes long. You know what 3 minutes costs for a Super Bowl? Plus the celebrities you paid to be on camera for 3 minutes. I mean, it's a phenomenal amounts of money. I don't think you can really justify. That's why I like kind of the younger brands that were like, this was their coming out moment and they sold the product and hopefully they're seeing it in revenue today and even yesterday.
Does that actually really happen? Like, I know you bought Poppy, but does other people, do you really track the ad to then results the next day?
I love Poppy.
I like Poppy.
No, well, I would if I mean, I don't know how you can't, because if you can't, you probably, and you're the CMO, you may not want to show up to work today.
Yeah,
So,
I guess that's true.
Yeah, so you need to show some results. I'll tell you, just switching gears slightly, the ad that I like the least, and I feel like I'm about to mention Google. I feel like I'm kind of trashing them. That's not the intent. But I felt like the Google Pixel ad, which portrayed this person kind of like talking to an AI, like it's like the people wrote the ad, watched the movie I Am Legend, and then said, let's make an ad where someone's the last person on Earth and they can only talk to their AI. It was terrible, in my opinion. I was literally does this? It just, I can't even describe like who thought that was a good idea. That's just my opinion. Maybe people loved it.
Well, what did the trends look like year over year? Are we seeing more of an uptick in corporations willing to spend money on ads at the Super Bowl, or was this a yearly decline?
Yeah, I think anecdotally, I think there's definitely a lot of interest, mainly because, again, there's just not many places left other than sports where you can get an audience and kind of do like your coming out party, or in Budweiser's case, try to revive your brand moment, or, whatever that is. And I think a lot of people do think that, it definitely can be a worthwhile investment, but it has to be mated with creative that people are going to remember and kind of have a positive feeling from. So I'm not sure that happened as much as it should have.
All right, Mark, we really appreciate you. You got to run, but thank you so much, Mark Douglas, President and CEO of Mountain, kind of going through the good and the bad of those ad results from yesterday. But, they really do kind of spend that money, but it's not like Fox winds up making any because it costs so much to actually get it all together. So.
Most definitely. And I mean, there were so many commercials that always just stay in your mind. And for me, it was the one with the seal.
Oh, yeah.
What was that?
I mean, you didn't like the animated seal's face on an actual seal?
It made me a little uncomfortable.
It was a little uncomfortable.
But so did the flying mustaches and the eyebrows that you mentioned.
No, I think that the seal thing was probably a little bit more uncomfortable. And it's like, wow. Remember when he was married to Heidi Klum? Like that called the pinnacle of his career.
Times have changed.
Times have changed. See, aren't we all impressed that I watched and can talk knowledgeably about the topic of the day?
I'm proud of you.
Thank you. And Paul's not even here to really celebrate
the commercials, not the game.
I can do either. I mean, come on, Chiefs, where are you at? You were still on Bourbon Street at that point. All right, we will talk much more about the markets and everything else moving here. Michael Halem will be joining us. Bloomberg Intelligence Senior Restaurant and Food Service Analyst will be covering McDonald's. Also, one stock to watch here, guys, Amex, American Express, down almost 3%. They're presenting at a UBS event right now, and the CFO is saying that the first quarter revenue growth is going to be lower than that fourth quarter, but they're still confident with that full year revenue guidance. That stock just shy of about $308 a share. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
Happy Monday, and as Alex says, happy congratulations to all those Eagle fans.
Nice, it's catching.
I'm stealing it now. Welcome back to Bloomberg Intelligence. I'm Nora Melinda, here with Alex Steele. Paul is out today. We've got stocks pushing higher. We have the S&P 500 up about 0.7%, and the NASDAQ up above 1% right now. But today we are joined by Michael Halen, and he is Bloomberg Intelligence Senior Restaurant and Food Service Analyst, here to talk about McDonald's earnings. So we have McDonald's sales that improved on stronger international results. What is your broad read on this, Michael?
You know, the most important piece of the report really is the U.S. recovery post E. coli, and we got some good news on that front. So traffic was actually positive in December, so I think that was much better than anyone had expected. They cited kind of a choppy January here, but the only region still impacted by E. coli seems to be the Rocky Mountain region where the outbreak occurred, and they expect a full U.S. recovery by the beginning of the second quarter, which is good news.
What about the rest of the world versus the U.S.? It was the rest of the world that really performed well, yeah?
Yeah, and a big part of that was just lapping like pretty weak year ago results, right? So we lapped the start of the Israel-Hamas war, and so the Middle East was stronger. Countries with large Muslim populations were also stronger, and then also China lapped a very weak result last year, and management cited some stabilization in that market, which is encouraging for them. So the easy comps was what really fueled international sales. You know, we're kind of more bullish on the U.S. moving forward than international, you know, because outside of the Middle East and China, Europe is we think is going to continue to kind of be an issue for them. The Eurozone is experiencing much higher inflation than the U.S., and that's really crimping low income and family spending on the continent.
Are people still buying the Big Mac?
They don't break out Big Mac sales, but they cited pretty strong results out of the chicken Big Mac, which I was kind of surprised about. You know, my associate tried it; he was not a big fan, but yeah, they cited you know, pretty strong results out of the chicken Big Mac in the United States and other markets. I think France was who they called out specifically, and to the point where they're going to continue to you know, bring it back as a limited time offer in the future.
So I was actually talking to an IB user, a Bloomberg user, about this. Why are McDonald's franchises elsewhere, like at rest of world, so much better than in the U.S. and that like you can get like super good food that doesn't taste like fast food? Like, why is that?
Yeah, Jonathan Farrow asked me the same thing this morning. He said he wants them all to be like the you know, McDonald's in Italy, you know. And the answer I had there was just more discerning tastes, right?
That might be it.
No, but really, like, is it? I mean, does it affect margins? Like, what are the margins like in the U.S. versus rest of the world?
We don't have that information. Okay. You know what I mean? It's a franchise business, right? So. You know what I mean? So we don't have a ton of color on all the different franchise markets and what kind of margins they pull in. You know, the U.S. Generally is a lower margin for the franchise business just because they have a lot more franchisees and need a lot more oversight. The international franchise business tends to generate wider margins.
So I always used to think about McDonald's as a really cheap place, a discount fast food place, but prices are getting higher. Are we still seeing demand from lower income consumers for the brand?
You know, it continues to be the weak spot at McDonald's, and for anyone that has a lot of exposure to low-income consumers, so the entire QSR space, right? Jack in the Box, Wendy's, Burger King. You know, a lot of chains, you know, struggled last year because of their inability to draw low-income consumers. You know, they're impacted most by inflation, right? We've had 4+ years of restaurant price hikes and higher costs across the board, right? And so, you know, chains that are exposed to low-income consumers are going to continue to press on value to try to bring them into the fold. You know, it didn't seem like restaurant sales did improve for quick service in the fourth quarter, and we think a big part of that is just a reestablishing of their value proposition, right? Mm-hmm. McDonald's early last year got a lot of shade about the $18 Big Mac meal in Connecticut, right? And so they decided to push hard on value. And prior to the E. coli outbreak, you know, October had some really good results. They were drawing customers in with that $5 meal deal, and traffic was positive for the first time during the year. So pushing on value has been successful for McDonald's. That's not good for their competitors because McDonald's has the most scale, right? But we think this is going to continue throughout 2025 in the quick service industry.
So just to confirm, you're saying there was a meal that came up to $18.
She totally missed this. She totally missed this one.
Yeah. It was one franchisee in Connecticut.
Of course, it was Connecticut.
Right, had to be.
No comment.
No, fair enough. Fair enough.
But
also,
he was pushing back because he was dealing with a lot of inflation, and he was just he wanted to make some money on the Big Mac meal. He was trying to make a point, and the press.
Greenwich special, they call it.
Oh wow.
No, I'm kidding.
So many things to think about on that. All right, Michael, thanks a lot. We're going to leave it there. Michael Halen, Bloomberg Intelligence Senior Restaurant and Food Service Analyst, joining us on McDonald's. All right, for our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on SiriusXM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research, because the next hour of Bloomberg Intelligence starts right now on a Monday where tech continues to lead the way with the NASDAQ up over 1%. Happy congratulations, Eagle fans.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. Happy congratulations for Eagles fans. I watched the game. Kansas Chiefs didn't show up, therefore the Eagles just trounced.
Wow,
We
good
did.
analysis.
Thank you. Fly.
Thanks very much. I'm Alex Steele alongside Norma Linda. Paul Sweeney is off today, skiing down the slope somewhere in Colorado. We have a great second hour Bloomberg Intelligence lined up for you. We're going to get the latest coming out of D.C. Steel and aluminum tariffs plus reciprocal tariffs. What can we expect on that front? Enda Kern will be joining us, Bloomberg Global Economy reporter. Plus, Brian Levitt is global market strategist over at Invesco. So his take on the broader market as we pound the drum to Jay Powell in 2 days of testimony in front of Congress. And Will Hares of Bloomberg Intelligence will join us on Elliott buying a stake in BP, and BP really feeling the screws on what their strategy should be. We'll break all of that down for you within the next hour. But let's kick it all off with the Business Flash with John Tucker.
All right, it is big tech stocks, the strongest forces pushing the S&P 500 higher today, including a 3.25% rise for shares of NVIDIA. Best performing individual stock in the S&P 500, that belongs to Rockwell Automation. Those shares up just over 11%. Worst performing stock, might as well do that, on semiconductor. Those shares right now down 7.8%. McDonald's is the best performing individual stock in the Dow Jones Industrial Average, climbing right now, up 4.9%. I want to say, the thing I hate about McDonald's, when you get in line with your car, you order the food, you pay for it, and then they make you go wait in the parking lot. And then they forget about you.
How often are you at McDonald's?
The last time it happened about a year ago, and I vowed never to go back.
Okay,
anyway.
well, maybe they changed.
Forget.
Maybe they changed.
No, I don't think that. I know. I go by. I see the cars waiting there. Investors focused on better than expected strength for the restaurants outside the United States. That's the Mickey D story. Stocks of steel, aluminum producers jumping, banking on the expectations that tariffs are going to help their products in the U.S. So you have U.S. Steel up 3.5%. Alcoa, which is based in Pittsburgh, is up 2.6%. Marvin Lowe at State Street, he says, you know what, investors looking for some degree of stability and certainty.
I mean, ultimately stocks have been a bit unsteady over the last couple of weeks. We're still reacting to this tariff news, so volatility certainly is part of that discussion. And yields, which have been, somewhat mixed, I think is capturing some of that ultimate uncertainty.
One of the standouts today, SpringWorks Therapeutics shares, they are jumping up right now 32% after Reuters reported that Germany's Merck is in advanced talks to acquire the cancer and rare diseases drug developer. And right now, the Dow Jones Industrial Average up 121 points, S&P 500 42 points higher. That's up 0.7%. The NASDAQ 100 right now 290 points higher. That is a pop of 1.4%. So making up for Friday's losses. This report being brought to you by IBKR. With a percentage of the U.S. experiencing drought conditions exceed 18% on February 18th of 2025, at IBKR Forecast Trader, the yes was recently at 35%. What's your take? But trade your prediction at ibkr.com/forecast. We check the markets all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Alex and Nora.
All right. Thanks so much, JT. Alex Steele here alongside Norma Linda for Bloomberg Intelligence Radio. Just something to track here. So the New York Fed came out with its inflation expectation report, and their 1 and 3 year is unchanged for January at 3%. I bring that up because we saw in UMich on Friday that jump in 1 year inflation expectations to 4.3%, which was a really big surprise, but a huge divergence between Democrats and Republicans. So I thought that the New York Fed one was quite interesting to watch.
Definitely. I mean, that's something to keep an eye on, especially as people are just trying to grapple with what it could look like moving forward, and so much uncertainty.
Which with
geopolitics.
Fed Chair Jay Powell is going to be mired in over the next 48 hours.
Isabel, lots going on in the market today. We have information technology, the best performing sector, and financials, the worst. What are you keeping an eye on in terms of individual stocks?
Shares of aluminum and steel companies, they just can't be ignored. They're really surging, and that's after President Trump planned to impose around 25% of tariffs on all imports of metals to the U.S. So he announced this over the weekend, and this includes suppliers in Mexico and Canada. So we have the likes of Alcoa climbing 3%, Century Aluminum also jumping, steel firms, Cleveland-Cliffs also up, and U.S. Steel. So the president also said he would announce reciprocal tariffs this week on countries that tax U.S. imports. And again, we don't know whether this will be enacted. It's uncertain whether he'll follow through. We know that he paused tariffs on Canada and Mexico, but still, it's enough to send shares surging really high on Monday.
What's interesting about commodity tariffs like this is that commodity markets are really efficient. So if you're going to tax something, the price of the actual commodity is going to come down in order to make up for the extra payment. Plus, you have regional differentials. So the price of aluminum here versus what the price of aluminum in London is going to be different. So you're going to have different payments also. It's just a very complex market. So to see how that will resolve itself, because it will be efficient. If you need it, you will get it. It just depends on what that price will be versus like a coat. Or something.
Could it also be because aluminum imports are being imported a lot, like in Canada, UAE, Mexico? I mean, I think it would be different if the U.S. produces enough.
Oh, sure. Yeah. That's what I'm saying. Like it's same thing for oil. It's why we still need Canadian oil, so it'll just reprice enough to make up for whatever tariff. They might not like it. The producers might not like it, but it will reprice. It's not like the demand just empties and goes away.
Exactly. And how do you make aluminum? You zap the living daylights out of it with lots and lots of electricity.
Oh my God.
Oh yeah.
Hugely energy intensive.
Mines, all of them. A lot of mines like copper, though, you can get better energy efficiency if you supply it in a different way. So
everyone will be an expert this week already.
What? Already? Man, it's only taken me 18 years. Okay, Isabel, what else you got?
McDonald's. I think this is interesting because it's up 5%. Sales rose in the fourth quarter, but there's kind of a nuance. So international business made up for the decline in the U.S. And we have McDonald's saying that the U.S. sales were the weak spot, and they're saying that low-income consumers in the U.S. are really still under pressure, and they expect the first quarter to still be a, quote, low point this year. And of course, we know that they emerged from this E. coli outbreak that really scared off some folks. And that's why for a while, I think my friends were just ordering the fish fillet or something because
but they are still
the patty.
McDonald's?
Yeah.
They're still going to McDonald's.
They're still going to McDonald's, but then McDonald's also said that guest count increased, but the ticket amount or what people were buying were much less.
Interesting. Any other companies you're keeping an eye on?
Last is Hyatt. Shares are flat or edging slightly lower, 0.3%. We have Hyatt Hotels agreeing to buy Playa Hotels for $13.50 a share. And this expands their reach in the all-inclusive resort. But we have a Baird analyst saying that why would they be making this deal when companies are rewarded for pursuing an asset-light strategy? So it really makes you think about the rationale behind this, but I'm sure it's well thought out.
All right. Thanks, Isabel. Really appreciate it. Isabel Lee joining us, Bloomberg's cross-asset reporter. All right, let's go to the topic du jour, and that's about Trump tariffs and how it actually could affect growth, for example. We're looking at economists kind of reevaluating the impact of policies on the U.S. economy. And then the sequencing, right? If you have tariffs now, but then you have tax cuts later, what that winds up looking like then for growth. Enda Curran is Bloomberg's global economy reporter, and he joins us now from D.C. What's the scuttlebutt among economists when it comes to President Trump's tariffs policy?
I think moving faster than expected, Alex, is one way to think about it. I mean, to be clear, there is no, surprise here that the president is either imposing tariffs or that he believes in tariffs as a tool of trade policy. But I think there is a sense of shock at the pace of the moves. Remember a couple of things. His trade team isn't actually confirmed in office yet. His Commerce Secretary Howard Lutnick and Jemison Greer's trade representative have yet to be formally appointed to their roles. There was an executive order on day one of the inauguration setting out the remit for a study into U.S. trading policy with partners around the world, but already we've had threats of tariffs on Colombia, threats of tariff on Mexico and Canada, actual tariffs implemented on China, 10% across the board. Also, that's new territory, not just intermediate goods across the board. And of course, now we have the expected announcement of tariffs on steel and aluminium that the president talked about yesterday, and the reciprocal tariff idea that he's also floated due for detail again this week. So, it's easy to say this isn't a shock. He spoke about it during the campaign, but the breadth and pace of it, I think, is catching people off guard.
So initially on Friday morning, when we got that report from Reuters that Trump was considering reciprocal tariffs that day, there wasn't really any indication of which country he was referring to. How are you all thinking about this whole concept of reciprocal tariffs and what the implications could be globally?
Well, the reciprocal tariff idea is going to be a very technical one. We really need to see the exact details of what the president is thinking about. But the rough analysis from people following this trade experts is essentially what the president is saying is if the U.S. Puts a tariff on one country's goods of, say, 2%, and that country puts a tariff on U.S. goods of, say, 10%, the president wants to level that up, to level the playing field. And the thinking is that this might be a replacement to the universal tariff of 10% that he spoke about. So different ideas there in the mix. But again, that's a technical one. We're going to have to wait and see in detail, but it certainly adds to the idea of more tariffs coming.
Mm-hmm. So the idea that the tariffs in and of themselves are no surprise, but it's the speed at which President Trump is moving on tariffs that is the surprise, which then raises the question of the quote-unquote positive parts of the administration, like deregulation and lower corporate taxes to then offset the hit we might take from tariffs. What do you guys expect in terms of the speed there?
Yeah, I mean, to be clear, the president and his team say that this trade policy, this hawkish trade policy, will drive investment in the U.S., will bring manufacturing back home, it will raise revenue for the government, and it will balance trading books with the rest of the world, along with, as you say, this deregulation policy, making it easier to build things, making it easier to extract resources and energy from the ground, get infrastructure projects moving, is kind of a pro-business deregulatory attitude writ large. So there is a case that the new administration will unleash animal spirits. Economists haven't yet downgraded their forecast or anything like that. The IMF singled out the US for its performance back in January. But, nonetheless, there's also a feeling that, wait a minute, right now, we seem to be at the very least at the pain stage of this. We're seeing those spending cuts at the federal level, those staff job cuts at the federal level, the tariffs, of course. The sweeteners have yet to arrive in the economy. That's the deregulation that you just mentioned. That's the tax cuts that, of course, haven't yet been agreed by Congress. So, supporters say, look, this is a big program here. Ultimately, it will lead to a stronger and faster growing economy. But a lot of skeptics are saying that there's potential for significant disruption and pain along the way. It's very early to say yet, but certainly plenty of skepticism and equal weight support on both sides of this.
So there's a lot of conversation about what tariffs can mean for different countries across the globe. But if we were to bring it back to the consumer, how exactly would that impact the consumer? Would we see countries just passing off tariff costs onto consumers? What does that look like?
Yeah, it depends on the level of the tariff and it depends on the type of goods, right? So, for example, the last trade war between President Trump's administration and China was mostly intermediate goods, like components, materials that factories are buying off of China. Ultimately, didn't have that much of an impact on Main Street inflation. This time around, the president has put 10% tariffs on all the goods coming out of China and coming into the U.S. So that's like consumer goods, typical household baskets. Similarly, for Mexico, a big portion of exports from Mexico to the U.S. was on food stuff like fruit and veg and on apparel. So if you start putting tariffs on those kind of products, then the question becomes, who's going to absorb it? Is the seller going to cut their prices and absorb that tariff, or will the buyer absorb the tariff in the U.S. or will it be passed along to consumers? And that's where economists say, hang on, some of this will surely have to be passed on to consumers, and that's why they say in the first round effect at least, will be inflationary.
Well, and that's the interesting part. I was talking about this a little earlier with Isabel and Nora about commodities, is that commodities are efficient markets, so they'll just re-rate. So the price of the commodity will re-rate to account for the tax in order to have the consumer or the company, whomever's buying it, want to buy it. If I'm buying a coat, that's not the same thing. Like, that's not an efficient market. I'm just not going to buy the coat. And so there's different distinctions based on what's actually being taxed.
There are different distinctions, and you hear some Fed officials making the point that even the Fed officials have different views. Like, some make the point it's a one-off. We kind of look through that impact. Others saying, wait a minute, this could be the kind of start of setting off a longer-term consumer inflation expectations. The University of Michigan survey at the end of last week showed that consumers are a bit worried about inflation now, especially due to tariffs. So it's it's not a very clear-cut impact on this, and for either side of the argument. But remember, again, there's also a bigger picture view that you have those people who argue this will drive investment and employment, but there are also those who say it will hurt consumer confidence and business confidence because they don't have certainty, they don't know how to invest. So there'll be a lot of confusion in the meantime until this trade policy does settle down.
So how are other global leaders responding to this? I know when I was watching the Super Bowl last night, I actually saw an ad from Canada about tariffs, and
I missed that.
Really, it was super interesting.
It wasn't like the weird cowboy hat thing. No, it wasn't.
It was
that.
not.
There was no mustache flying around. All right.
There was no mustaches, but it was a really interesting ad, and I'm just curious, what are you all seeing in terms of the response from other world leaders?
Well, again, early days. You get different response from different capitals, but broadly speaking, when it comes to merchandise goods trade, a lot of the messaging has been, what do you want us to buy? We're willing to step up. Mexico stepped up with putting troops on the border for that fentanyl and immigration issue, as did Canada. But Canada has also made clear that, they're in the market to buy U.S. goods. The European Union has said that they're willing to step up and buy maybe more U.S. gas or other products. You have Japan here last week, Prime Minister Shiba talking about $1 trillion worth of investment in the U.S. And this goes around. All of these world leaders make the point they're willing to invest and buy goods. But they're also making it clear that they will retaliate in kind as well. If the U.S. pushes this trade policy too far, China has already retaliated. Literally today, those tariffs from China have gone into effect on agricultural goods, agricultural machinery coming out of the U.S. into China. And of course, we've got some antitrust measures going on against some U.S. companies as well. The EU have a playbook ready to retaliate if they want to. Canada had threatened to retaliate, as did Mexico. So, there's a kind of a play nice. We'll come and see, can we do a deal on all this? But if that doesn't work out, they're willing to respond as well.
All right, and I really appreciate it. Always the best. Enda Curran, Bloomberg Global Economy reporter, joining us on Trump tariffs and what that does to growth, which, Nora, makes sense in terms of the markets because it feels like the buy the dip scenario has continued. Last week and the week before, got a lot of notes out about how that retail army, mom and pop investors, were out in full buying the dip, 2 to 3% dip, they're buying. And then Goldman Sachs saying that last week we also saw hedge funds come in and buy as well. So it's still a resilient market from that perspective.
Most definitely. People are trying to see whether or not this is an opportunity to see stocks go further, especially after we saw more than 20% gains in the market last year.
Right. Although, if you take a look at still year to date, it's still Europe that's outperforming, which is like, is Europe cheap enough to buy the value trade, or there's still too much risks, especially then when you factor in growth and then potential tariffs, and then does that just get kind of like a nightmare?
On the U.S. side, there's also conversations about whether or not valuations are too high.
Yeah, that's true.
Lots to keep an eye on.
That's true. Apparently, the Mag 7 has been struggling except for Meta.
Except for Meta.
17 days or something, 15 days, some crazy number out there. Stocks definitely rebounding today. NVIDIA now up for 5 days, surging about 15%. Oh, Meta 16, there we go. 16 consecutive sessions that Meta is higher as we still take a look at those material producers, steel and aluminum. All right, coming up, Brian Levitt is Bloomberg's global market strategist at Invesco. His outlook on the markets. Plus, Will Hares, Bloomberg Intelligence global energy analyst. We'll talk to him about BP and Elliott building up a stake in that company. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. This is being brought to you by Oracle. Attention, growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, after Friday's sell-off, major averages right now, they're pushing higher, and technology shares, they're in the lead. You have NVIDIA and Broadcom. They're the leaders in terms of the index points in the S&P 500. Shares of NVIDIA up about 3% right now. And American Express shares, they are down about 2.5%. The credit card company saying first quarter revenue growth, that's going to be lower than fourth quarter growth. Microsoft under investigation from the French Antitrust Authority amid concerns they degrade the quality of results when smaller rivals paid to use Bing in their own search engine products. So far, the shares pretty much holding up. You have gold, which is a haven. That is at a record. Let me do spot gold here. Is up 1.6%, so $29.33.90 an ounce for gold. The Cleveland Fed's January survey of firms' inflation expectations for the first quarter showed CEOs and other top executives expect inflation, as measured by the CPI, to be 3.2% over the next 12 months. That is down from 3.8% back in October. As a result of that, looking at treasuries on the move today, the 2-year, which is more policy reactive, down almost 4 basis points at 4.25. The 10-year yield, 2 basis points lower, and that is at 4.47. Certainly that's helping equities. The NASDAQ 100, 260 points higher, up 1.2%. The S&P 500 is 34 points higher. That is up about 0.6%. And the Dow Jones Industrial Average, 38 points higher. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Nora and Alex.
Thank you, John. As he said, we have markets in the green. We have the S&P 500 up about 0.6%. The NASDAQ pushing up more than 1%. This is largely driven by gains in energy and tech stocks. Happy congratulations to all the Eagles fans celebrating. Nice. And my deepest condolences to the Kansas City Chief fans. We do have a wonderful guest in the studio today. I'm Nora Melinda, co-hosting with Alex Steele. Paul Sweeney is out today. We've got Brian Levitt, global market strategist at Invesco, joining us from the Bloomberg Interactive Broker Studio to discuss his view on markets and the game last night. I understand that you didn't have a great night.
As a New York Giants fan, it was a tough 100 season, and I think last night was the cherry on top of a terrible season for the New York Giants. It was a tough watch.
It was a tough watch. Well, looking at markets, there's lots going on right now. Where are your eyes? I mean, geopolitics, we've got tariffs going on. Today, what are you thinking about?
It's a lot about this concern about policy uncertainty, which certainly hurt markets a little bit in the beginning of the year and select days. My focus is policy uncertainty dissipating? Can we get to a place where, look, we've priced out all the Fed cuts that were expected. Maybe if the Fed's on hold, or if we get a slightly weaker inflation number, we can start to think about easing again. And what the market right now is, they don't seem overly concerned about tariffs or what we're going to see from the administration. So could we get greater clarity there? All of that should further help the markets.
So from that perspective, do you sit tight, put cash on the sidelines, like ready to work, or do you already have your positions that you feel good about? You just sit back and wait and see what happens?
Positions are already set. I mean, okay. It's a focus on, largely from here. I want to be exposed to equities. If you're in an environment where the Fed is done tightening, which we suspect they are, markets tend to do well over the subsequent years. So I still like that backdrop. The question really now comes down to, how do you want to think about market leadership, and do you get more of a broadening? And if inflation stays in the upper end of the Fed's comfort zone but does not become problematic and nominal growth looks decent, that should help more value names, more mid-cap names, maybe even things starting to get a little bit better in the international markets. Not great, but a little bit better. So no, it's not about cash on the sidelines. It's more how to think about equity market leadership over the next months.
How are you thinking about market valuations? I mean, we saw gains of more than 20% in the market last year. Do you expect that to continue?
I'm not overly worried about market valuations. If you look at the broad S&P 500, yes, it is trading at multiples that are above the long-term average, but that's concentrated in, top-heavy names, many of which investors expect will continue to grow into those multiples over time. If you look at an equal weight index, which is all 500 names get 20 basis points, you're trading at very average valuations. Mid caps are trading below long-term averages. Small caps, Europe, EM, all at about average. So no, not overly concerned about valuations. And I remind investors all the time that valuations are not timing tools. If the economy is going to get better, if the monetary policy backdrop continues to be supportive, or at least directionally supportive, that's good for equities irrespective of where valuations are.
What about the bond market? What do you do with the bond market?
I'm not sure a whole lot is going to happen in the bond market. It's been a volatile period where I thought rates were overbought at 3.8% on the 10-year. Rates were oversold at 4.8% on the 10-year. And it feels like we're moving into a more reasonable environment. If you think about where the 10-year should be, it's, some prospect of nominal growth plus, some term premium. So 4.5% seems reasonable. And that would entail, in order to have a normal yield curve, or, the Fed funds rate would have to come lower than that to get to a more neutral level. And ultimately, I expect us to get there, just maybe not as quickly as investors initially expected.
So I imagine you hold a lot of long-term positions, but are there any sectors that you're concerned about in the near term?
Nothing that I'm overly concerned about. I mean, the risk would be, of course, if rates have to jump from here, right? If you have inflation and rates jump, then longer duration parts of the market, like
jump to, is it 5%, or is it a level, or is it the velocity?
It's the velocity,
okay.
right?
Okay.
So, anytime we see a move in rates higher, then yeah, longer duration assets, particularly tech stocks, would be hurt by that. It's not the base case. To me, that's the risk to this entire outlook. The risk to optimism is if you truly believe inflation is going to accelerate and the Fed's going to have to tighten, well, that's a bad outlook for risk assets. That's a bad outlook for long duration sectors. But that's not the view. And our view, again, is that things start to moderate a bit. The Fed does have to lower rates, and cyclical sectors should perform well in that environment.
How many cuts are you guys penciling in?
The market thinks 1 or 2 this year. That seems reasonable.
Okay.
The market in September thought that we were going to see a funds rate below 3% by the end of the year. To me, that seemed over. I don't know if that's over enthusiastic or over pessimistic. It's like, well, what's going to happen in the economy that we're going below 3? So I think, I might be in the minority on this, but I believe that a funds rate in the mid-4s when you have inflation in the comfort zone is a bit tight. Well, the Fed may not be answering my phone calls right now because inflation is at the upper end of the comfort zone, but ultimately, I think they're going to have to get back to a more neutral stance, which is probably in the mid-3s.
All right, Brian, thanks a lot. Really
pleasure.
appreciate it.
Thank
Brian
you.
Levitt. Sorry again about your loss there.
It's
last
next
night.
year. There's always next year.
Next year. Global market strategist over at Invesco. Thanks a lot. We really appreciate it. All right, one stock we're watching is BP. Those shares surging the most since 2020 over in London after one of the world's most aggressive activist hedge funds, Elliott Management, built a stake in the company. The goal to end years of underperformance by pushing for some significant change. Only one person to talk to when it comes to BP. Will Harris, Bloomberg Intelligence global energy analyst. Hey, Will, I think it's worth going back a little bit. What are all the problems that Elliott wants to fix?
Thank you for having me, Alex. I think there's too many to really go through given our time constraints here, but I think they can really boil down to a significant moment, which was the original rollout of their 2020 energy transition strategy. This is the quickest, most risky energy transition of all the global energy majors, and it sort of it depicted a pretty quick drop in their upstream hydrocarbon production, a really rapid rollout of their renewables portfolio. And obviously, this has not been taken well by the market. It's undermined the sustainability of their distribution. It's hit their returns, and especially now when we are seeing a sort of backlash against ESG, we're seeing a slowing of energy transition paces across this sector. It hasn't gone down well for BP's financial performance or share valuation.
So, Will, if we go back to that moment in 2020, and I was there when they laid out this new strategy, was that a bad strategy or was it bad timing or some combination?
There is some part of me that has a little bit of sympathy for BP because I think they were trying to do the right thing, and then of course Russia's invasion of Ukraine sort of upended the global energy sector pretty materially. I also think that they were trying to do the right thing, but doing the right thing isn't always what's best for investors, and I think just comparing it to some of their peers, particularly Shell, which has taken a much more capital disciplined approach. They have a very high bar for acquisitions. They've been very prudent in their energy transition rollout, and we can just see in the financial performance and how the market is valuing them, which has been the more successful strategy over the last 4 or 5 years.
And just building off of that point, I mean, over the past 5 years, we have BP shares down about 8%, while its peers Shell and Total Energies have gained about a third. So as we think about BP in particular, what really can they do in this moment? What are investors really looking for?
So I think I'll touch on what Elliott is, I think, going to try and do. There's 4 levers that I think Elliott might try and pull here. And the first is transition business spinoff. So this can remove debt and capital intensity of these businesses off the balance sheet. We think that they'll push to focus on growing their oil production more. The current oil production is supposed to be declining about 10% to 2030. We can hope to see that flatten or increase up over that same time period. And I think there could be a push for a board change. The chairman of the board, Helge Lund, has overseen BP since 2017, and compared to peers, there's been pretty underwhelming performance there. And then finally, a primary U.S. listing. I think that this could be a big game changer. It has not only been discussed at BP, but amongst the other European majors. It's seen as a major hurdle to starting to close that valuation gap with Chevron and Exxon.
Yep, Shell also sort of long rumored to be looking into that as well. Hey, Will, really appreciate Will Harris, Bloomberg Intelligence Global Energy Analyst. Super interesting, it's true. The board's been there for a while, so you have to wonder how long and how swift these changes will have to come to really start to move the needle. All right, we have much more coming up for Bloomberg Intelligence. Let's stay with the energy market. We'll be talking to a Bloomberg BNEF Derek Flackoff, lead policy analyst for the U.S. We're 2 weeks or 3 weeks into Trump? 3?
I can't count right now.
Time has no meaning. We're a few weeks into the President Trump energy transition revolution here, if I can say that. It's going to be energy independence and then what that actually has been meaning for different forms of energy. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This is Bloomberg Business Flash, and we are being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Stocks rebounding from the sell-off Friday. We're being led right now by technology and materials producers. NVIDIA extending the 5-day surge there, and then Meta Platforms rising for a 16th consecutive session. You also have materials producers in the spotlight. This comes amid President Trump's plans to impose 25% tariffs on imports of steel and aluminum. U.S. steel shares, they're up 3.8%. Then you have Alcoa, the aluminum producer based in Pittsburgh. Those shares are up 2 3/4%. Meantime, uncertainty over Trump policies may rein in company investment, at least according to Michael Purvis at Tallback & Capital.
I do wonder whether there's just going to be a lot of C-suite conservatism actually coming in. If this sort of policy uncertainty lingers, it's very hard to put out a multi-year plan when you have no idea.
Some of the key events this week include Fed Chair Powell's testimony and CPI data that could drive the market story and impact investor sentiment. S&P 500 up 35 points, a rise of 0.6%, 6,061 on the index. The Dow Jones Industrial Average up 55 points. The Nasdaq 100 265 points higher. That is up 1.25%. Oh, Fox agreed to buy online producer Red Seat Ventures. So that'll bring back into the fold former Fox News commentators, including Bill O'Reilly and Megyn Kelly. Red Seat will become part of Fox's Tubi media group. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Nora and Alex.
This goes full circle.
This is so interesting.
Circle of life. All right, JT, thanks a lot. Alex Steele here alongside Norma Linda. Paul Sweeney is off today. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. And once a week, we take a look at our colleagues over at Bloomberg BNEF, formerly known as Bloomberg New Energy Finance. They're the team within Bloomberg that tracks and analyzes the energy transition, whether you're looking at data, power, commodities, transport, buildings, ags, as well as business and finance and cross-cutting technologies. They really are the best in the business. And joining us now is Derek Flackel, Bloomberg BNEF lead U.S. policy analyst. He joins us from D.C. Derek, it's been a very challenging few weeks to keep track of all the changing energy policies. Where do we sit today from where you stand?
Well, where we stand today is at a point of uncertainty and early consolidation. At this point, we've heard a variety of conflicting reports about the release or lack thereof of obligated federal funding for climate grants. We've heard reports that EPA has released some, others that are implicated by some of the president's DEI-related orders. Anything with an environmental justice or a community benefits component have been more affected. And meanwhile, at the executive level, we've seen some people like Brooke Rollins at the USDA, Doug Burgum at the Department of Interior, and Chris Wright at the Department of Energy get into place and put forward their formal priorities. So with that early staffing up in place and continued uncertainty about the release of funds, we are kind of looking at a wait-and-see period, seeing how things shake out in the courts and in the executive branch itself.
Well, it definitely has been a massive makeover that Trump has been planning to do and is continuing to do right now in terms of federal agencies. But are there any areas in particular that you're keeping an eye on? I know that there's things going on in terms of EV charging funding.
Right, absolutely. I mean, sectors that were specifically named in Trump's executive orders, oil and gas, there's supposed to be forward momentum on that, as well as electric vehicles and electric vehicle charging and offshore wind in particular. EV charging on Friday saw a pause on existing disbursements of funds from the National Electric Vehicle Infrastructure Program. That's about $5 billion, if I recall correctly, from the Infrastructure Investment and Jobs Act. about $1 billion of that had been allocated. So it's clearly a disruption to those ongoing disbursements. Keep in mind that there's also something called the Charging and Fueling Infrastructure Program, which was not as directly targeted by that, that's obligated rather more funding. So there's still some forward momentum so far to the EV charging sector, but what this does is throw a bit more sand in the gears of that continued forward movement.
Do we know what the Republicans' energy plan consists of versus just rolling back certain things? Like, we know that it's energy independence and we want more oil. Like, I get that. But in terms of dismantling Democrat policies versus their own support for different industries?
I don't think we do, and there's two different reasons for that. Firstly, on the executive side, my sense is that they are reviewing and looking to see which aspects of existing policies are worth keeping in place for goals like national security, energy independence, and so forth. Certainly, we've seen emphasis that subsidies for nuclear, critical minerals, manufacturing, those should continue, and to the degree that renewables can help meet new load for new factories, for data centers, that might also be somewhat protected. We've seen these reversals quite rapidly, even in the renewables permitting space, for example. Within the same day, our colleagues at Bloomberg News reported that solar federal permitting was paused and then unpaused by the U.S. Army Corps of Engineers. That's just the federal side, executive side. On the legislative side, we are still waiting for the Senate and the House to come together on one core plan for the big tax and reconciliation bill that's going to come later this year. They need to find a lot of pay-fors to extend Trump's tax cuts from 2017. And other than being sure that they want to sell more oil and gas leases and cut back taxes on methane, they're not really consolidated around one common plan of movement. The House wants to do one big, beautiful bill. The Senate wants to have an early energy measure. And of course, the earlier you move on some of these big unifying factors like the border or like increasing supplies of fossil fuel energy, the harder it will be to have consensus on doing some other, maybe more controversial things like pulling back clean energy subsidies that have mostly benefited Republican districts and states. So we're really waiting to see where these negotiations land. And I think the more that businesses continue to engage with the Trump administration to make the case for their priorities in Trump's own terms, the more we'll see clarity around where this administration will land ultimately.
So with the new administration in power, where do things stand with Biden's Inflation Reduction Act, particularly tax credits?
Right. So the key thing about tax credits is that these are a bit more of a complicated instrument than simple grants and loans, right? There's legal obligations that are associated with those, but there's also a lot of sort of intervention points to try and keep that money back. With taxes, that's a thing that you file to the IRS eventually gives back to you, and further complicating this, the IRA created a sellable tax credit market. So right now, there's a lot of businesses that effectively have anticipated getting tax credits from the government later and used that to sort of set up some transfers with other businesses in advance. Everything is kind of moving along before tax day comes and before IRS disbursements needs to come back. But because of all of that, there's a lot less certainty right now about whether tax credits are affected by this alleged funding freeze. And of course, that it's sort of like, the roadrunner running off of a cliff in a cartoon. As long as you don't look down, maybe there's not as much fall as you would expect. We're going to see later on what real implications this has. Now, from what I've read of legal analysis, it's going to be particularly hard to try and hold back tax credit funding, even if, there's a longer wait on that. But that level of uncertainty has yet to affect the market, to my knowledge. Later on, though, we'll see.
Yeah, it does seem that for tax credits, that needs to be more of an act of Congress versus an executive order. So a lot of TBD. Also, as you point out, a lot of those tax credits were going to Republican states. So unclear as that how that shakes out as well. One thing is definitely clear: offshore wind is toast. I mean, it was already struggling before, and now it feels like offshore wind is definitely in the crosshairs. Derek, thanks a lot. We'll catch up with you soon. Derek Flakel, Bloomberg BNEF lead U.S. policy analyst, joining us from D.C. All right, coming up, Mark Morial is a CEO of National Urban League. He's going to join us on the Trump administration's federal funding freeze and the impact on DEI and how that is spreading across industries as well. Taking a look at the market, tech still leads. You have the Nasdaq up by about 1% off the highs, but just barely. And the S&P is up by about 0.5%. The Dow Jones Industrial Average up about 1%. Happy congratulations, Eagles fans. I'm going to keep saying that all day. This is Bloomberg.
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, happy Monday, everybody. Alex Steele here alongside Norma Linda. Paul Sweeney is off today. This is Bloomberg Intelligence Radio. We are live from our interactive broker studio right here in Midtown Manhattan. Also check us out on YouTube.com. All right, wanted to get a broader take on the Trump administration and some deeper changes taking place nationally, particularly when it comes to diversity, equity, and inclusion. Mark Morial, CEO of National Urban League, joins us now on this. And side note, Mark was mayor of New Orleans from 1994 to 2002. Mark, did you watch the Super Bowl? Were you there?
Hey, I was there, and I was an Eagles fan because I lived in Philadelphia during my days in college at UPenn. And I tell you what, I didn't expect that outcome. I felt Philadelphia would win, but I thought it was going to be a competitive game all the way down to the end. It wasn't really a competitive game. The Eagles really, really dominated.
Yeah.
They took it.
Chiefs. I think it was surprising.
It was, from somebody who like literally just started to understand football yesterday. I'm actually not kidding. I was like, what is this? Chiefs, huh? What is that team? Anyway, side note, I'm glad you went. I'm glad you got to see it. Either way, it was always a fun experience to watch. Mark, you are CEO of the National Urban League. It's the largest historical civil rights and urban advocacy organization in the country. What are you guys doing right now to combat sort of anti-DEI rhetoric and policy from DC?
So we are working very hard to get institutions, leaders, corporations to reaffirm their commitment. Jamie Dimon and JP Morgan Chase have done so. Roger Goodell and the National Football League have done so. Companies like Delta and Target, and there's an entire list. Those that have reaffirmed their commitment may not have gotten as much media attention as those that have walked away. I'm dismayed by those who say they have walked away. What every company in America should be doing is living up to the meaning of the Civil Rights Act of 1964, which prevents non-discrimination, or rather is a non-discrimination law which prevents discrimination based on race, creed, color, religion, and national origin. Many of those who are promoting from behind the scenes the anti-DE&I movement are trying to roll back progress this nation has made over the last 70 years. Women, African Americans, Latinos, Asians, Indigenous Americans, disabled Americans, LGBTQ Americans have had a chance over the last 70 years to participate in the mainstream of American life, in jobs and business opportunities, around corporate board tables, in elected office. This is a full-scale attack on all of that progress based on a false and misleading narrative that somehow diversity, equity, and inclusion promotes quotas and undermines merit. I take great exception to that, because what diversity, equity, and inclusion says is give everyone with merit a chance, not just some, not just men, not just white men, give everybody, including a chance for the opportunities that America represents. That's what this is all about. And so we are going to continue to work and fight and advocate for continuation of this country's commitment to equal opportunity.
Well, Mark, it sounds like last week was a really big week for you. You were inducted into the NOLA Walk of Fame on Thursday, and you received a humanitarian award, the first time a non-sports person was chosen for this award at the Super Bowl party on Saturday. So very big week for you. But back on the notion of companies walking back their commitments, do you think this is really just a sigh of relief for companies that weren't necessarily genuine about these commitments? Or do you think maybe corporations just want to have the freedom to make their own decisions without having to necessarily report and be held accountable in those ways?
Well, reporting and being accountable is what the law requires. It's always required that. That's our system of laws, our systems of the Constitution. But I think some companies are frankly being intimidated. There's a behind-the-scenes effort to intimidate, to defame, to threaten companies. I heard one story where a company was told that if they did not walk back their DE&I, this group would launch a social media campaign and show some lewd and lascivious videos that may have taken place at an event that the company co-sponsored. This is what we're faced with. Faced with a smear campaign, a campaign of attacks, a campaign of division, and yes, it is a campaign of hate. Major corporations in America operate under a rubric of law. They follow that law. That law makes things fair and equitable for everyone. All diversity, equity, inclusion is a program to implement non-discrimination laws. That's what it represents. And this nation cannot walk back, and we are going to battle and fight and work in the courts and in every way, shape, or form possible to ensure that this nation remains committed to equal opportunity.
Hey, Mark, it's really good to catch up with you. Congratulations on the host of the awards. Congratulations on the Eagles winning as well. Thank you so much for your time today. Mark Mayoral joining us there, CEO of the National Urban League. And there were some Say No to Hate campaigns. Some of the commercials, those weren't bad. Those were good.
Those were interesting for sure.
They didn't have flowing eyelashes or mustaches.
No mustaches in the sky.
You know, I mean, it was a little disturbing.
But I think we need one more happy congratulations.
Yeah, happy congratulations, Eagles fans.
Yes.
All right. We're
Fly,
going to go
Eagles, fly.
spread that cheer. Nora, thanks a lot for joining me for the 2 hours. Really appreciate your insight as always. All right, let's take a look at where we're settling out here on the markets midway through the day. The NASDAQ leading the way up over 1%. The S&P is up about 0.6%. Taking a look at the bond market, we're seeing some steady buying all across the curve, really seeing more buying in their front end. Yields down by about 3 to 4 basis points. We have like $130+ billion worth of supply coming online this week. So 310s and 30s still will be significant. Joe Matthew with Balance of Power is up next. Thank you. Yeah, I got
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump fleshing out his controversial plan for U.S. control of Gaza.
Ever since the president said he wanted to take control of Gaza and move the Palestinian people out, there have been big questions surrounding where they would go and what if they didn't want to leave. When asked by Fox News if they would have the right to return to their territory, Trump said,
no, they wouldn't.
He says the area isn't habitable now and it would take years to rebuild. As to where the people would go,
I think I could make a deal with Jordan. I think I could make a deal with Egypt. You know, we give them billions and billions of dollars a year.
Stacey Lynn, CBS News, the White House.
A Hamas official said today it will delay the next hostage release after accusing Israel of violating the Gaza ceasefire agreement. President Trump plans to make formal today what he said yesterday on the way to the Super Bowl, a new executive order.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum, too.
China's retaliatory tariffs against the U.S. took hold today. The head of the federal agency that looks to protect whistleblowers has filed a lawsuit saying he was illegally fired by President Trump. For years, there's been debate about the future of the penny. CBS's Linda Kenyon reports the president has ordered the Treasury Department to tell the U.S. Mint to stop production.
In a post on Truth Social, Trump cited the cost of producing the 1-cent coin, writing, "For far too long, the United States has minted pennies, which literally cost us more than 2 cents. This is so wasteful." He added, "Let's rip the waste out of our great nation's budget, even if it's a penny at a time."
A federal judge who today blocked the Trump order ending birthright citizenship for children of people in the U.S. illegally says he's not persuaded by the administration's arguments. That ruling follows 2 similar decisions by 2 other judges last week. On the Health Watch, CBS's Wendy Gillette tells us there's a new study out about peanut allergies.
Children with a high threshold peanut allergy who ate gradually larger doses of peanut butter became much less sensitized compared to those who avoided peanuts, according to the study from New York's Mount Sinai. The researchers say increasing doses of store-bought peanut butter is a safe and inexpensive way to handle the allergy.
A parade for the Super Bowl winning Philadelphia Eagles is in the works for Friday. The Eagles dismantled the 2-time defending champs Kansas City 40-22. Philly quarterback Jalen Hurts, the game's MVP.
Everyone has to have a level of selflessness to achieve great things as a group and as a unit and be truly committed to what the mission is, and that's winning.
This is CBS News. It seems more people are microdosing Ozempic and other weight loss drugs.
Some are doing it because they only want to lose a little weight. Others are microdosing for the side benefits like anti-inflammation, so their faces look thinner and their cheekbones are more defined. Ashley Hilms runs a medical spa in Boston.
We've really seen that there is something to customizing it for people.
Many microdosers swear it helps them think clearer and have more energy too. But Hilms says you can run into problems if you try to microdose on your own.
Being able to see someone in person helps us encounter that a lot less often.
Some doctors are skeptical of the impacts of microdosing. Michael Wallace, CBS News.
About 2 million baked goods, including some donuts and coffee rolls, sold at Dunkin' have been recalled over possible listeria contamination. The manufacturer is FGF Brands. The recalled items were produced before December 13th of last year. Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Markets yawn at the tariffs. Welcome to the fastest show in politics. As President Trump moves to implement 25% tariffs, he said it last night, against all imports of steel and aluminum. Markets appear to be taking the news in stride here, or are we whistling past the graveyard? We'll have the latest ahead from Bloomberg's Mike Shepard here in Washington. Forget the tariffs. Did you hear about the penny? Donald Trump says he's getting rid of it. We're prepared with Bloomberg's Stephen Dennis, who saw this coming. You'll find out in a moment with analysis this hour from our political panel. Jeannie Shanzano, Democratic analyst and Bloomberg Politics contributor, joined by Ashley Davis, Republican strategist at S3 Group. So let's get started. As we follow the music out the door, we go to Wall Street. An update on the markets right now from Charlie Pellet in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Welcome back. We missed you. We've got the Dow, the S&P, NASDAQ all advancing. Back to work. Monday post-Super Bowl. A lot of green on the screen right now with the S&P up 32, up 0.5%. The S&P at 6,058. Stocks kick off the week with gains, rebounding after a slide driven by concerns over inflation and U.S. tariff threats. The Dow up 50 right now, up 0.1%. A 1% gain for NASDAQ, up now by 204 points. The Russell 2000 index of small cap shares up 0.4%. 10-year at 4.48%. The 2-year 4.25%. Gold now up $41 the ounce. Gold trading above 2,900. That is a record for the precious metal, up by 1.4%. West Texas Intermediate crude 72.48 a barrel. WTI up by 2.1%. As for tariffs and what it means for the equity markets, Samir Samana is senior global market strategist at Wells Fargo Investment Institute, and he was interviewed this morning on Bloomberg The Open.
You know, what we've told investors is, look, focus on the direction of travel, which is, you know, net, you're going to see higher tariffs. At some point, they're going to lead to higher inflation prints. Maybe not the number later this week, but at some point, you're going to see higher inflation. You know, you're going to see consumers pay more for a wide variety of goods. And then at some point, the Fed's going to either not cut at all or maybe even have to talk about, you know, raising interest rates.
Samana was interviewed this morning on Bloomberg The Open. President Trump plans to impose 25% tariffs on all U.S. imports of steel and aluminum, a topic that, yes, we'll be covering a lot more on Balance of Power. Among some of the steel and aluminum names right now, U.S. Steel up by 3.7%, Nucorp up 5.9%, Cleveland Cliffs up 13.8%, and among some of the aluminum producers, shares of Alcoa up 3.5%, and shares of Century Aluminum up by 10.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington once again. Here he is. And again, welcome back, Joe Matthew.
Oh, Charlie, I do appreciate it. Good to see you, and welcome to the Monday edition of Balance of Power here on Bloomberg Radio, on the satellite radio, and on YouTube, where you can find us right now by searching Bloomberg Business News Live. Hope you had a great weekend. I know a lot of people are peeking through one eye after a late night. Maybe Donald Trump included. The president was at the Super Bowl, of course, although I guess he didn't make the second half, right? You got to get out of there early so everybody else can get out of there. And we have a lot of questions about what was said in the suite, knowing that this is the venue that the president enjoys for political planning, say congressional legislative sequencing. We'll get to all of that. The real news happened Air Force One on the way out. Pretty sure I heard Josh Wingrove talking to Donald Trump about the tariffs. Yes, we're back on a Monday talking about tariffs. Will they last the day? They didn't last Monday. President Trump says he's going for steel and aluminum. This is not a surprise. 25%. The question would be across the board, does this actually include Canada, from where we buy a lot of steel? And what about China? Those tariffs are kicking in now as well. I'll let you know, an hour from now, Donald Trump is going to be holding forth at the White House to sign some executive orders. And if you've been with us since he's moved back into the White House, you know that typically turns into a bit of an impromptu news conference. So whether or not we get something official on this, or maybe some more clarity on details, we'll find out together and let you know what appears to be hour 2 of Balance of Power. With what we do know, the great Michael Shepard, Bloomberg senior editor for technology and strategic industries. He's a Washington insider, is all you need to know. It's great to see you, Mike. I hope you survived the Super Bowl and you're ready to do this again. We're in the spin cycle here, right? We are all trying to claw to get to the middle of the merry-go-round because we're about to fall off. And it's tariffs again. After we went through the Mexico, Canada thing, the Colombia bit, this would be all steel and aluminum imports from presumably dozens of countries. How wide-sweeping would this be?
Well, we don't know. And we will find out perhaps at 1 p.m. when the president signs these executive orders that you just mentioned, and we can perhaps expect one of those orders to cover steel and aluminum, but we don't know for sure. We don't know exactly what the order of battle will be on this, and if there might be some carve-outs. Remember, Donald Trump is also looking to promote further energy development in the U.S., and you can also wonder whether he might also try to exempt somehow national security-focused industries that might also depend on cheaper or perhaps more sophisticated sources of certain types of steel and aluminum, too. So all of these details really need to be kind of spelled out for us, as poor journalists trying to figure this out, but more importantly for investors and for the companies that are going to have to then make their investment in hiring decisions based on whatever we hear from the president.
It's surprising to see the markets hanging in there today, as I mentioned earlier, whistling past the graveyard or bored by this because, well, there's nothing specific really to trade on. You're seeing steel stocks move higher. That makes a lot of sense.
That does, of
but
course,
is Wall Street in a let us know when it matters kind of
I
mood here?
think they are really, after having seen the tariffs imposed on Canada and Mexico and then withdrawn for at least a month-long abeyance, that maybe Donald Trump is not moving so fast. That perhaps he's using this some sort of a bargaining chip or negotiating tool to get something else he may want. But remember, we have been down this road before, Joe. In 2018, he actually did impose tariffs on those two metals, and back in 2018, and they stayed in place until Joe Biden took office, and he had to peel them back and do further negotiation with the European Union in particular on that. And many of these allies and counterparties have already prepared their responses. We saw how China had responded to the 10% across the board tariffs on Chinese imports that the president unveiled a week ago and put into place a week ago. So we will have to see how these countries are affected. And it's a good question on Canada and Mexico, because there was this pause, like, no, there will be no tariffs. Does that include now an asterisk for metals like steel and aluminum? And don't forget, Canada is a huge supplier of both steel and aluminum to the U.S. when it comes to imports, and Mexico, too, is not too far behind.
We saw the numbers. I'm going to ask you about China. From the American Iron and Steel Institute, the biggest supplier of steel to the U.S. last year was Canada, followed by Brazil, something close to your heart, Mexico, South Korea, and Vietnam. These are friends we're talking about here. Add China. It is unclear whether this is a double tariff, right? The last round of tariffs just went into effect, 10%. So do we get another 10% on steel and aluminum?
I would not presume to write the order for the president, but I would not see him trying to get too fancy. And,
so assume
maybe
this is another layer.
We would just have to assume for now that this is another layer, because they've talked about these as additional tariffs in other instances.
Last time you were in this chair, you might have been in San Francisco when we were talking, was after Jensen Huang paid a visit to the White House. There was a big conversation about export controls. Will Donald Trump turn the screws even more? Or might he loosen them after spending time with a guy like Jensen? Well, we haven't heard back on that.
No, we haven't. And on the export control question, in part that was stoked by, the revelation of DeepSeek's breakthrough, doing much faster and cheaper work with artificial intelligence modeling and using perhaps some NVIDIA products and perhaps getting around some of the export controls that exist, or maybe somehow slipping under them. And if those controls need to get even tighter, that is one of the questions that they are looking at, but we have not heard yet. And remember, it's really only been a week or two, and while every day seems very long under the new administration, just because of the sheer volume of policy changes and moves that we are seeing and having to digest. When you think about it, it's really only been a week or so since DeepSeek kind of, hit the
Yet we're
scene.
looking at DeepSeek totally differently now, aren't we? Will that knee-jerk reaction look foolish a couple of years down the road? Everyone, look at these earnings reports from the hyperscalers. Everyone is spending so much money they can't get it fast enough.
Well, the theory is that maybe, perhaps, DeepSeek benefited from those hyperscalers' work, and this is certainly what Microsoft and OpenAI are insinuating, that perhaps they went a little bit too far in extracting information from results generated by OpenAI and were able to apply it somehow. We haven't seen that borne out by any sort of results of an inquiry demonstrating that for sure. And meanwhile, the open source champion right now, Meta, is pointing to it and say, hey, look, AI for everybody. It's working for us. You can make it work for you. So there is sort of a second wave of thinking about DeepSeek. And yet it does highlight that the U.S. does face competition, especially from China in this area. Alibaba also has, its own model that works quite well, too, and really vaulted to the top of the rankings when it comes to AI models.
Well, nothing that DeepSeek told us has pulled the hyperscalers back, Meta included, from tens of billions of dollars in planned CapEx spending. We've got a couple of minutes left. You mentioned OpenAI. You see the commercial on the Super Bowl? They bought a suit, and it was a full minute, I believe, which cost an extraordinary amount of money. But it was also very well made.
Yeah.
I wonder your thoughts on what that tells us, that it was even in a stop set in the Super Bowl, a company that most people had not heard of during the last Super Bowl, I would argue. But also the fact that it was stylistically effective. Is this the new Apple 1984 ad?
It may break through like that. I don't think it had quite the... I remember seeing that Apple ad.
Stopped you in your tracks.
It really did stop you in your tracks. And yet, the production value in this, as you noted, was really high. And this was a statement. They wanted to say, in a lot of ways, we have arrived. And there was also an ad from Meta about artificial intelligence.
Yeah, there sure was.
And but it did, that one felt perhaps a little more dutiful, and they were trying to explain the merits of it, but it didn't have the same panache, maybe. And OpenAI certainly has captured a lot of people's attention and imagination since ChatGPT hit the market back in November of 2022.
That's when you know you're mainstream, I guess, right? When you make it to the Super Bowl.
Right.
It's the Who Needs the Wheaties box.
It's our turn, right?
Yeah, exactly. It's our turn. Mike Shepard, great to have you back, Mike.
Great to be here.
Happy Monday, and thanks for being with us as we set the record straight, or at least we'll be trying to today, on the tariffs. Again, we'll hear from Donald Trump if it's on time in about 45 minutes, and we'll let you know what he's doing with that Sharpie. 25%, though, at least as of now, on all U.S. imports of steel and aluminum. Doesn't matter where it's coming from. I suspect he's on the phone talking about this with some stakeholders, which will impact the outcome of this story at the end of the day. So stay with us. We'll be watching the markets as well here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks kicking off the week with gains, with the Dow, the S&P, NASDAQ, all higher. S&P right now up 28. That is a gain of 0.5%. The Dow up 35, up 0.1%. NASDAQ up now by 181 points, up 0.9%. While the 10-year's at 4.49%, the 2-year 4.25%. Spot gold up $38 the ounce, $28.99, up 1.3%. West Texas Intermediate crude up 2.1%, $72.52 a barrel. And Bitcoin just above 97,000, up now by 1.9%. Bottom line here, stocks are rebounding after a slide last week that was driven by concerns over inflation and U.S. tariff threats. Oil major BP surging after Elliott Investment Management built a stake in the company, seeking to end years of underperformance by pushing for significant change. ADRs of BP up now by 7%. And Hyatt Hotels has struck a deal to buy Playa Hotels and Resorts for about $2.6 billion, expanding its reach into the all-inclusive resort market in countries that include the Dominican Republic and Jamaica. Hyatt shares, they're down now by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, great to see you, and thanks for joining here on the Monday edition of Balance of Power. Charlie will be back with more on the markets a little bit later on this hour as we wait for details on tariffs. This market could change a little bit depending on what the White House tells us later, about 35 minutes from now, at least on the schedule. President Trump will be signing some executive orders. They have not been detailed on the schedule, but we do expect one of them, maybe several of them, to address steel and aluminum tariffs. Questions about whether there'll be exemptions. We're double tariffing China. What about Canada, the primary source of steel on an export level in this country? We need to find all of this out still, and there will likely be market implications here. We're kind of dancing along listening to Charlie, and interesting that we haven't seen much action outside of the steel companies. We'll let you know what goes on there. As we turn to what I would argue is the most important story of the day, tariffs seem to come and go around here. The penny, not so much, though it may be going. That's the latest order from the President of the United States to the Treasury, which, of course, oversees the mint. Stop making the penny, he says, calling them wasteful. You do wonder about these executive orders, the stroke of a pen or a Sharpie impacting entire industries or businesses. Has anyone reached out to Coinstar at the grocery store? Stephen Dennis, as a matter of fact, has. Before this order went out, we were talking to Stephen about the veracity of the penny, the value of the penny, the staying power of the penny. Stephen covers Congress for a living, but is an expert on the penny. And he's with us right now at the table. Did I go too far with that? I feel like you're pretty close to an expert.
I found this penny issue fascinating for decades. For decades, we've spent more money to make a penny than the government gets back by selling them to banks, right? And so this is like such an old, issue. They actually made a West Wing episode about it. And people have been trying to kill it or to suspend the production of it. John McCain actually had a bill a number of years ago to kill the penny. To stop minting them.
You can still use them.
Yeah, you still use them. I mean, there are something like 200 billion pennies in circulation.
Yeah, right.
So they're not going to go away overnight. Even if we stop minting them, we've been minting about 3 or 4 or 5 billion every year. And so that's potentially $100 million in less spending.
Yeah.
But, in the past, Congress has not wanted to take on the penny lobby. And
the penny lobby?
Yeah, so there's,
Who are these guys?
There's pennies.org. There's a company in Tennessee called Artisan.
Were you referring to Americans for Common Sense?
Yeah, there's
TS?
There's various groups out there that lobby to keep the penny. Yeah. And so you have the company that makes all the zinc blanks is in Tennessee called Artisan.
Okay.
So they make money off of the penny.
Which is not made of copper.
Oh, still has some copper in it.
It's a little copper.
Mostly zinc.
And these people have real jobs at this place?
There's still lots of people who mine the zinc, mine the copper, make the stuff.
The trade is, pennies.org. These guys they're not volunteers.
There used to be a company called Jardin Zinc. It's been around since the 1800s, making things like pennies.
Yep.
And so, there could be a fight on Trump's hands here with people who represent districts where there are penny jobs. But this has been one of those classic cases of Washington not wanting to, squeeze something because you have to take on somebody who's going to be lobbying to keep their piece of the pie.
Well, so Doge got a head start on this.
Yes,
and took to X saying the penny costs over 3 cents to make. Consider that, and cost U.S. taxpayers over $179 million in FY 2023. Penny or 3 cents for your thoughts, it said. Donald Trump making the point that when do you think the last time Donald Trump used a penny was?
I think it's unlikely he's used a penny. Just,
You ever know guys who throw the pennies out?
Yeah, I mean, if you think about it, like minimum wage now is $7.25 an hour, still $7.25 an hour. You'd have to bend down 725 times every hour just to make minimum wage. Wow. And that explains why there are 200 billion in circulation.
Yeah,
and, people throw them out. People throw them into the river. The people put them in jars in their basements because nobody uses them. The only person I've seen using one in the last year in the U.S. Senate, where I eat every day, is Ed Markey. So he's
to the penny.
He's basically when
he bought lunch.
He's been in Congress for many decades. He's truly old school.
Yes.
He wants to mandate AM radio in every car.
Yeah, God love him.
He still uses pennies and sort of wadded up dollar bills to pay for his lunch, and but everybody else uses a card. So the demand for pennies is plummeting. Retailers tend to not like having to have cash registers waste their time sort of counting them. Right. So
enter Coinstar.
Yeah, now Coinstar also, their entire business model is basically based on people not wanting to count them out and finding them useless, so they'll go to Coinstar and dump in hundreds of pennies to get like a gift card or something.
Yeah.
And so I don't think Coinstar is going to be actually that hurt that much because
there's still a lot of dumb pennies.
People still have 200 billion pennies to turn in. Now that's only $2 billion. It's just when you think about the actual amount of money involved here, it's pretty small.
Yes, right.
And that's the classic example in Washington where they say the juice isn't worth the squeeze. Do you actually want to squeeze it?
Yeah.
When you're going to have to make some people unhappy.
We're getting the best of Stephen Dennis right now. I hope everyone who enjoys
Don't forget the nickel.
Aware of this.
Don't forget the nickel.
I'm about to go there because Ed Markey will be glad to know that the people at penny.org, penny or pennies? Pennies.org. Well, they see the nickel eating us alive.
Yes.
If you do away with the penny. Now, by the way, I was shocked to learn today that the nickel costs 13.78 cents to make. This is way worse than the penny.
Yeah.
And they say you take pennies away, you know what's going to happen? Drive up the cost of the nickel.
Well, and they also, people might use more nickels.
You're going to need more nickels.
Right. So, the next step would obviously be getting rid of the nickel. Now, nickel uses nickel, which is actually very important for things like EV batteries, right? So you have Elon Musk. He uses a lot of nickel in his Teslas.
Correct.
Right now, we're like digging nickel out of like an island mine in the South Pacific.
We're surrounded by it.
And using some of that nickel in nickels, right? So, the nickel costs a lot more than we currently get back from the banks.
Now, Canada's done this, right? They just round everything up to
lots of countries have gotten rid of it, and it's no big deal.
So that it would be $9.95 from now on. If it had been $9.91, you're going to go to. We're probably not going to notice. This.
Congress could theoretically come in and pass a law to govern the rounding up, rounding down part of this.
Yep.
But in the meantime, it might be just sort of like anything goes.
This is a fascinating conversation in the age of blockchain.
Yeah.
Is there an eventual goal to eliminate all the coins here, all the physical coins, so we're doing digital coins?
I mean, if you think about the inflation that we've had and the inflation we're going to continue to have, even if we get down to the 2% target, eventually all these coins become worthless. You know, you're going to, you know, the dime might stick around a little longer. The quarter currently make a profit on. That's not going to last another 100 years. So, and the reality is fewer and fewer people are using physical money. They are using their credit cards. They're using their debit cards. That trend is going to continue. And then you've got people talking about, well, we can do stable coins, and you can have a stable coin card. You can go to Walmart and use the Walmart stable coin card. There's already talk of, you know, doing all that sort of thing as well. Nobody's using pennies. Like, there are a few people who say, well, charities use it in the, you know, holidays. You can go to the Salvation Army and dump your pennies into the, but that's still a lot of friction, you know, to actually give somebody some money. And this may be the time the pennies finally go away, but it's also possible that Congress says no. Sure. On Article 1, Congress has the power to mint coins. Now, they've given the secretary some discretion. You know, the secretary has some discretion on how many to make. So I wouldn't be surprised if the Treasury Secretary, you know, says we'll mint 10,000 this year.
Well, it's funny to think, you know, Congress doesn't have a lot to say about ending entire federal agencies, but you mess with the penny, you're flying a little close to the sun. Pennies are made of zinc, little copper. Is there steel in any of this stuff? Do the steel, aluminum tariffs increase the cost of the coins?
But there was a proposal by Joni Ernst, who kind of got the ball rolling here with Doge. She's the co-chair of the Doge caucus. She had a bill with the Democrats to change the composition of pennies, nickels, and other things to make them a little cheaper. Not to get rid of them entirely, but to make them a little cheaper than 3 cents for a penny. So you could, metal you could make them out of something cheaper. But that bill doesn't seem to be going anywhere. You know, anytime you're doing something like this, you're going to have a zinc lobby, a copper lobby. You know, you're going to have the nickel lobby. They're not going to want to lose their money. The unions aren't going to want to lose their jobs.
The penny lobby and the nickel lobby, like they have like chain fights in the parking lot. Are these guys opposed on different?
You know, it does seem.
I've never met any of them.
It does seem to be every metal and every coin out for themselves. You know,
seems like maybe they could band together for the greater good. Now, next time I find like a green gross penny in a pocket or in the couch or whatever, it's kind of corroded. Am I saving that for posterity? Or there's just so many of them that they're going to be worthless?
I think unless they're an old penny, that they're basically worthless.
Got it.
You know, there's 200 billion out there. There's like, think about how big that number is. That is a stupefyingly big number. It might be the most common thing out there other than like dental picks. It is, and people aren't saving those either. So like,
I didn't know that.
This is just, you know.
This is the kind of stuff you learn when you talk to Stephen Dennis in the pantry, in the hallway. This is the kind of man you want to have in the newsroom. Thank you for bringing your expertise to us here.
Sure, anytime.
On Balance of Power when it comes to the mighty penny. I'm Joe Matthew in Washington. Glad you came along. You didn't think you were going to learn as much about the penny today. Look out for the nickel lobby, guys. They're not fooling around. We'll assemble our panel coming up next. On the fastest show in politics, this is Bloomberg.
And when you hear thunder, don't run under a tree. It'll be pennies from heaven.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks pushing higher, equities kicking off the new trading week with gains, rebounding after that slump last week, driven by concerns over inflation and tariff threats. Right now, the S&P's up 34, up 0.6%, 6,060 where we stand on the S&P. The Dow up 79, up 0.2%. NASDAQ up 208, up by 1.1%. The 10-year at 4.48%, with the 2-year currently yielding 4.26%. Gold is trading higher at $28.99, was printing above $2,900. Indeed, the precious metal at a record, up 1.4% right now, higher by $38 the ounce. And Bitcoin up 2.1%, 97,286 on Bitcoin. In Washington, inflation and retail sales headline the week's economic data. And with the preview, here's Bloomberg's Vinny Del Giudice.
The Consumer Price Index is due Wednesday. Bloomberg Economics anticipates some encouraging signs in January's report, including tamer shelter costs. However, the outlook is in doubt based on data from the University of Michigan. Tariffs are the issue. Americans see the inflation rate at 4.3% over the next year, well above the Federal Reserve's target. Meantime, January retail sales are set for Friday. Industry data point to a dip in auto sales. Vinny Del Giudice, Bloomberg Radio.
President Trump is set to sign an executive order rolling back enforcement of a law making it illegal for American companies to bribe foreign officials, arguing that the restriction puts American firms at a disadvantage. Toronto Dominion Bank expects to raise about $14 billion through the sale of its entire stake in Charles Schwab. Schwab shares down now by 3.2%. And American Express lower after the credit card company said first quarter revenue growth will be lower than fourth quarter growth. American Express down now by 2.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcast. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you, sir. As we peek out of one eye this day after the Super Bowl to get something done on a Monday, at least we can do this program. Thanks for joining us. On the Monday edition of Balance of Power, on this 10th of February, will go down as the day I learned about the penny lobby from none other than Stephen Dennis, of course. You heard the news if you were with us a little while ago. If you're just joining us, President Trump wants to kill the penny, something we make billions of every year at great loss. And this is now prompting some chatter among listeners and viewers, as Ryan sends a message saying, this is our government to a T. Pennies cost 2 cents to make. Why do we make them? Arguing to spend only 2 cents to make something worth 1. The math is pretty basic here, but as Americans for Common Sense, CENTS, tell us, you kill the penny, people use more nickels, and those are even more expensive. Our panel had no idea what was in for today when it logged on for the program. Jeannie Shanzano is back with us today, our Democratic analyst, Bloomberg Politics contributor, and senior democracy fellow with the Center for the Study of the Presidency and Congress. And Ashley Davis is back with us, Republican strategist, partner S3 Group, former senior staffer, Homeland Security. It's great to see you both. Life without the penny. I wasn't planning to talk to you about this, Jeannie, but my gosh, this is something that Donald Trump could do that would actually make a difference. Who's against it?
Apparently, there's a whole group. I learned from you, Joe Matthew. I had no idea. And now I'm thinking, do I hoard my pennies? Do I hoard nickels?
Exactly.
I'm not sure which way to go. But I must say that the name of the group, The Sense, that really got me to chuckle. So I really quite
for
like
Common Sense. Ashley, you know about the lobbying world here in Washington. Did you know there was a penny lobby on K Street? There's a nickel lobby. They're looking at each other across the street. This could be war.
Yes, they're going to get into a big fight. No, I did not, but I am not surprised. There seems to be a lobby for everything these days, and even more as more policies are happening. But, you know, I'm not a big change person in regards to change in my purse, so I am like kind of happy the penny's going away.
We have, boy, just consistent reviews here. No love for the penny.
I may get canceled for saying that, Joe.
Yeah, no, I don't think that's true. I think the penny is gone. To poor Abe Lincoln. The lobbying effort that I wanted to talk to you about, that led to this moment in time for Tulsi Gabbard, and for that matter for RFK Jr., is already being written about as people try to figure out exactly how we got to this point. I will let everyone know that a bit later on today, 5:30 p.m. Eastern Time, Tulsi Gabbard has a very important hurdle to clear in the Senate. It is expected she will pass that hurdle and go to the floor, both of them, both nominations for DNI, Health Secretary in the case of RFK Jr., are expected to hit the floor of the Senate this week. And if you've been listening to our conversations with Ashley and with Jeannie, you already know that they are probably going to be confirmed. They've likely gotten through the hard part. And the pressure campaign that went behind this has been remarkable. Jeannie, your thoughts as Tulsi Gabbard prepares to hear that she's confirmed as this incredibly important, essentially top spy in the nation, as they call it, DNI. This is as good as done. Did Democrats miss their opportunity to slow this down or to kill it altogether?
I don't know that they missed an opportunity. They don't have much bargaining room here. They can slow these processes down a bit, but if the Republicans go along and then they can't get 4, meaning the Republicans against any of these nominations can't get 4, then these things are as good as done. And so I think that's what we're likely going to see with Gabbard, with RFK Jr. There's still a few people who haven't gone on record, but by all indications that these nominees are going to pass. And I think what is important to remember is you look at a Tulsi Gabbard, and what was it that some Republicans like Langford and Young were concerned about? Yeah, right. Things like her refusal to describe Edward Snowden as a traitor. And this is somebody who will handle our secrets. And if Edward Snowden is not a traitor, who is? So this is what was concerning the Republicans who were on the fence, but credit to the Trump administration and their Sherpas. They were able to convince them, and as was Tulsi Gabbard, to her credit, that she should be confirmed. At least that's what we suspect in the case of Young and maybe Langford. And so she gets through. But, this is who's going to be leading the DNI now.
And it's not just these two, right? We were told Pete Hegseth wasn't going to make it. Boy, Norm Coleman had his work cut out for him. Ashley, we heard all 3 of these, but you were in conversation with us. You heard what we were hearing, and you had your own sources on this. They said, you know what? Tulsi Gabbard is different. She's not going to make it. You've got 15 Republicans at least ready to vote against her. She's different. She's not different, as it turns out. She's likely to be confirmed. How did the Trump administration manage to turn the narrative this quickly on Tulsi Gabbard?
So, yeah, you're exactly right. And I do think, just before I answer that question specifically, the election with the numbers, as Jeannie was talking about, the fact that the Republicans have a few members to work with, few senators to work with, which historically in the last, 15 years, we've had lower numbers just by 1 or 2 votes. And so it does give people the ability to vote against some of these nominees, but they are still able to get through. Obviously, I've been saying since the beginning to watch McConnell, Collins, Murkowski, but then people like Tillis, Young. I think that to answer your question about Tulsi, from what I've been hearing and from what I've been told is that she has had a very, very good person in her corner, and that is J.D. Vance. And I think that RFK had the same. And from what I understand, so does Kash Patel. So I think that J.D. is working his former colleagues. I think he's giving some of these senators assurances, whether it's Cassidy for RFK or Young for Tulsi, that is really helping these nominees move forward. I also, and do not want to get into any security issues here, I think that there's probably different layers of Tulsi's current security clearance. She's been able to get her security clearance renewed over the past several years, actually over the last year. So all the different things that have kind of come out about her, I bet you there's 2 sides to the story, which are probably making some of these senators be okay with, especially Susan Collins.
Yeah. Interesting. There are always 2 sides to the story, Jeannie. Is this conversation then something that we'll simply never be able to hear about? The briefings that took place behind doors, the closed doors, the closed door Q&A that she had with the Intelligence Committee?
say never in Washington, D.C., Joe Matthew. We might inklings, but, I don't think it's imminent.
It's all going to be in Jeannie's book. You just hang on.
Just wait. I do think this speaks volumes about the change in the Republican Party in the Senate. And this is no longer a party of Mitch McConnell, although he is still there. And Ashley just mentioned him as one potential no vote on one or more of these folks. This is no longer the party of, say, a Jeff Flake or a Bob Corker or some of these folks, Mitt Romney, who may have been willing to either criticize Donald Trump, which they all did at various points, and or to describe themselves as institutionalist and really felt that the Senate's job was a robust one, and the ability to say no to a president's nominee was something that they were willing to do. We don't see that as much. Now, granted, historically, most of these nominees get through, so there is that. But we're not seeing that as much. And again, I think the credit there, and Ashley just mentioned this, goes to the administration. They have done a remarkable job against really tough odds, whether you look at, Hegseth or Gabbard or JFK or Kash Patel. These are controversial nominees, and they have been able, dealing however they have, to get assurances to those on the fence senators to feel comfortable. And so that is something that is to their credit. That said, the American public hasn't stood up in any concerted way against these folks. And I think that's what we have to think about. At some point, does an RFK Jr. say or do something, say, on vaccines that creates an outrage? That's something to watch for, but that'll be long after he's confirmed.
You think about the Bill Cassidys, Ashley, the Joni Ernsts, those who were openly threatened by their fellow Republicans, some of whom they serve with, others on the other end of Pennsylvania Avenue, openly threatened with being primaried if they did not vote to confirm these individuals. Is that really what this came down to? Some good old-fashioned political bullying?
I think so. And I don't actually, I think this has been more public than times past, but I remember there was a lot of this behind the scenes, even during Bush, to get some of his confirmations through. So it's not necessarily abnormal, at least on our side. However, I do think because the president did win the way he did this time, which was obviously completely different than how he won in 2016, that he and his supporters feel that they have a little bit more ability to demand what they want. And Cassidy's already in trouble with or without this vote. He's taken some tough votes over the years, impeachment and others, that he's going to have a very hard challenge in the primary anyway. Joni's been able to walk the fine line, but I think that it does help keep people in line a little bit. And who knows what's going to happen 6 months from now, 18 months from now. I mean, the pendulum could swing, but right now they, meaning the Trump administration, do hold all the cards in regards to this.
Sure, the pendulum can swing, and a lot of things, once you're hired, can swing. If you look at the tenure of cabinet secretaries in the first Trump administration, Ashley, do you suspect it'll be any different this time? Because we could be doing confirmation hearings all over again in 6 months if that is the case.
Yeah, absolutely. There is some differences between this time and last time. I do think, and I will credit her every time I talk, that Susie Wiles has been able to bring some stability to this administration. I actually think, I was listening to Trump's interview from yesterday. He said, I didn't know Washington's, 4 years ago, I didn't know how it ran. I made some decisions that were poor. I probably wouldn't have made them this time. I've had 4 years to prepare. And so it is, even though it may not seem like it, because everything's coming so fast and furious right now, there is a little bit more structure than there was last time. But going back to something Jeannie said just quickly about, if JFK does something that's outside the norm on vaccines and things that he said he wouldn't do, he can be fired very quickly. So even though he's confirmed, doesn't mean that he will stay for 4 years.
Yeah, well, and since you mentioned RFK Jr., we've only got a minute here, Jeannie. As you know, Rick Davis used to talk about blue MAGA. The fact that these are both former Democrats actually improved their chances because Donald Trump wanted to say he had Democrats in the fold. Is that true?
I don't know that it increased their chances of getting confirmed in the Senate because we don't see yet many Democrats willing to support them. But I do think it's in keeping with what Donald Trump has been saying he would do on the campaign trail, which is that there are issues like the case of RFK Jr. as it pertains to health and this whole MAHA movement. And those are important to Donald Trump. And so those two nominees reflect that kind of ability to co-opt some Democratic talking points.
But where are these nominees on the penny? I have no idea on any of them. Jeannie and Ashley will be with us in our second hour here on the fastest show in politics. So do stay with us. I'm Joe Matthew. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's tariff time again. Welcome to the fastest show in politics as President Trump moves to add 25% levies on all imports of steel and aluminum. He's about to sign some EOs in the Oval Office. We still have a lot of questions, though. I'm Joe Matthew alongside Kaylee Lyons in Washington, where this is about to happen. Welcome to the Monday edition on the early side here of Balance of Power. Kaylee, I hope you had a great weekend. Markets don't seem to be too bothered by this yet because we still have to fill in a lot of blanks.
Well, yeah, and I think markets might be a little bit used to the tariff head fakes at this point. Remember when they were going to go into effect on Colombia, then pulled back? Sure. Last week, we began the week with the 25% levies threatened on all imports from Canada and Mexico. Those were delayed for a month. So will these steel and aluminum tariffs actually come to fruition today? I guess we're all about to learn together as the president heads to the Oval Office, but it's also not clear how wide in scope this is. Sure. Does this apply to Canada, for example, which received a tariff exemption just last week, even though that's the vast majority of our aluminum imports?
Correct.
Unclear.
Talking about Brazil, Mexico, Vietnam, some friends in the neighborhood here and around the world suggesting, to your point, maybe the need for some exemptions. China, not so much. And there's a question about whether they're actually now under double tariffs because that first round the president just announced at 10% just took effect. So maybe we get a 1-2 punch here with steel and aluminum. We don't know. We'll find out when the president's in the Oval with some reporters.
Yeah, we'll see how many headlines he makes. He has a tendency to make a lot of them when he's signing executive orders these days. And I wonder, too, if he's going to weigh in on the work of the Department of Government Efficiency and the legal challenges that DOGE and this administration is running into when it comes to their efforts to trim down the government. We'll get into all of that this hour with Mick Mulvaney, former acting chief of staff in the first Trump White House. But we begin, as always, with a check on the markets and go to Charlie Pellet up in New York. Hey, Charlie.
Well, hello there, Kaylee. We have got the Dow, the S&P, and NASDAQ all advancing back to work Monday. Stocks are kicking off the week with gains, rebounding after last week's slide, driven by concerns over inflation and tariff threats. Right to the numbers with the S&P up 38 now, 6,065. That is a gain of about 0.6%. Dow Industrials up 108, up by 0.2%. And the NASDAQ Composite Index up 225 now, up by 1.1%. The 10-year at 4.48%, with the 2-year 4.26%. Spot gold up $42 the ounce with a $2,900 handle. $29.03 right now on the precious metal. Yes, a record up by 1.5%. West Texas Intermediate crude up 1.9%. $72.35 a barrel, and Bitcoin now up 2.3%, 97,450 on gold. Tariff talk out of Washington. Shares in aluminum and steel companies are all advancing. Among some of those names, Cleveland-Cliffs up now by 18.8%. Nucor among the steel companies up 7.2%, and U.S. Steel up by 4.7%. And among aluminum names, Alcoa out of Pittsburgh. Alcoa shares, they're advancing 3.6%. Century Aluminum shares up 10.9%, and Kaiser up now by 2.9%. Recapping, stocks higher. S&P up 0.6% for on-demand news 24 hours a day. Subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much indeed, running us through the beginning of the trading week here. And I can't help but notice volume's a little bit light today. And I do wonder if there's a bunch of traders away from the desk post-Super Bowl blowout by the Eagles. Of course, a Super Bowl that was at least in part attended by President Trump. He left early. Yeah. Maybe didn't like the halftime show. Maybe it was just for security and logistics purposes. But it wasn't so much about what he actually did at the Super Bowl as the news he made around it. Specifically on the plane, on Air Force One, when he gave us this on tariffs last night.
I'll be announcing probably Tuesday or Wednesday at a news conference reciprocal tariffs, and very simply, it's if they charge us, we charge them. That's all. It'll be great for everybody, including the other countries. But if they are charging us 130% and we're charging them nothing, it's not going to stay that way. We'll also be announcing steel tariffs on Monday. Any steel coming into the United States is going to have a 25% tariff. What about aluminum, sir? Aluminum, too.
All right, that's a lot to unpack there, which we're going to do in a moment with Enda Curran. Did you see the map behind him? If you were with us on Bloomberg TV or on YouTube, He actually gathered everyone there to talk about or to cover what he said was a very more important moment, I think, even than the Super Bowl, which was Gulf of America Day. He made it a holiday instead of the Gulf of Mexico. That was as they were flying over for an important moment there, had the whole map on the easel. That's not, again, what we're here to talk about today. And Curran covers the economy for us here with his eyes on the global economy and with us now at the table. Here we are again asking you about tariffs, and we don't know exactly where this is going. And I want to kind of pick apart what President Trump just said there. Reciprocal tariffs, one thing, steel and aluminum, another. Could end up scooping up a lot of countries in this action, or will it? Will there be exemptions when the president emerges a short time from now?
Well, on paper, you're talking about key trading partners.
Yes.
There's Canada, there's South Korea, there's India as well, of course, when it comes to the Security Alliance, and also obviously those European nations. So it does go into the world of, is this competitive trade against, say, China, or allies being scooped up in the same bucket? We'll have to see the details, Joe, in terms of when it gets implemented and how, and will there be exemptions. The reciprocal trade point, that's more technical, more complicated. Again, we'll need to see the details, but as the president said, most trade experts this morning were saying it's effectively if the U.S. sells goods to someone and they say have a 10% tariff on those goods and the U.S. only has a 2% tariff coming the other way around, well, that's going to be leveled up. That's the thinking. But the interesting subplot coming out of that is people saying maybe this is what the president is going to do instead of the universal tariff. Remember, he had the idea of a universal tariff of 10% on everyone? Sure. Well, now they're saying maybe he's going to go this reciprocal way and do that instead of the universal.
So is that how we make sense of the market's lack of real reaction, if you will, Enda? Or is this they're just waiting until something is final before trading on it, given our experience for the last 2 consecutive weeks?
Certainly waiting to see when it's signed off and actually in action for sure. The steel tariffs on their own are considered to be a game changer for either the U.S. economy or the Canadian economy, the economies involved, or the world economy. Individually, maybe car companies and steel companies, of course, will feel an impact, but in the bigger macro picture, the bigger focus remains on the broader trade policy, not just on these specific steel tariffs.
Is in fact an opening gambit. The last one took about 24 hours, right? Then Donald Trump ends up on the phone with the leaders of Canada, Mexico, many of the same players, with many more this time around. Whether that moves the needle, he's got his eyes on the EU coming up next. Will there be additional tariffs beyond steel and aluminum when it comes to EU members?
Well, all of the signaling and messaging the president has given is that, yes, the EU is in for a sweep of the broom here as well. It's not just going to be steel. He's talked about autos, for example, the fact that unequal access to their markets. It's going to be food. I suspect it'll be across the board when it comes to the EU. He has carved out the UK from that at times, making the point that their trade is doing okay, but there are other areas he wants to balance the books with the EU. But remember this idea about negotiating tools and the like is there, but there was also an expectation that perhaps the tariffs, the retaliation tariffs that China has put on U.S. goods wouldn't go into effect. That both leaders would talk. That didn't happen. Those tariffs went into effect today on U.S. goods going to China.
So obviously a lot when it comes to tariffs remains uncertain, which does make me wonder tomorrow and Wednesday, when we see the chair of the Federal Reserve testifying before the Senate Banking Committee and House Financial Services Committee, undoubtedly going to face questions about this. I guess it would be kind of easy for him to punt and say the policy is unclear, so I cannot tell you how it's going to dictate our monetary policy decisions at this point.
Yeah, he obviously can legitimately, to some extent, say, hang on, it's still early days here. Yeah. But, as I was just saying about the China tariffs, some of this stuff is now actually happening. It's not just all threat and negotiation gets called off. Right. The China tariffs are on both ways. U.S. and China goods, China and U.S. goods, that's happening. The deportations are happening. The fiscal spending and the federal staff cuts are happening. So the Fed chairman will have to start giving a nod that this is now happening, and here's how we're thinking about it. Yes, he can say for sure how it's going to impact the economy, but I don't think he can just say, early days, let's wait and see what the policies are.
Yeah.
All right, Enda Curran covering the economy and tariffs for us here at Bloomberg. Obviously, much still uncertain as far as this goes. And again, Donald Trump is expected to be signing executive orders in the Oval Office. It was scheduled to begin about 8 minutes ago. Hasn't yet, but I would imagine we're going to get some news on this front.
Yeah, we'll dip our toes into that event. Of course, Donald Trump has been kind of talking to the press pool in a way that presidents haven't in the past. Usually this collection of reporters, one representing each platform or each medium, will kind of stand in the corner of the room. Maybe they shout a couple of questions. Usually they're whisked out. These turn into full-blown conversations that take some time.
Yeah, they go on for quite a while, sometimes 30 minutes or more, answering a wide range of questions. And I would imagine he's going to get some today as well on DOGE, the Department of Government Efficiency, and efforts underway to unwind portions of the U.S. government. It started with USAID. It has now moved to the CFPB. And someone who's very familiar with that particular agency is joining us now. Mick Mulvaney here with us on Bloomberg TV and radio, former acting White House Chief of Staff, former OMB Director, of course, former Republican Congressman from South Carolina. Mick, during your tenure in the first administration, CFPB came under your charge. Now that Russ Vought has essentially said to tell the agency to stop work at least for this week, no one's getting access to the building. It does seem that this is intended to be a kind of full freeze on the operations of this regulator. How are you watching this go down?
With a great deal of joy. Is that the right answer to that question? Look, I also understand that he either today or is preparing today to request $0 for the funding of the Bureau in the upcoming quarter. The same thing that we did when we first got there. By the way, he's able to do that because he found out there was a $700 million slush fund in the accounts. That was only $170 million when I was there. So clearly, Rohit Chopra had been running up the drawdown in anticipation of not getting any more money. So anyway, look, no, it's very aggressive. I love it. We thought we could do this in the first term. We floated this to the White House lawyers. They said that there were other priorities at the time, so we didn't try this. I'm glad to see they're actually giving it a shot.
So, Mick, it's great to have you back. There are going to be people listening to this conversation and watching this on Bloomberg TV, listening on the radio, who don't have the experience with this agency that you have. The idea of consumer advocates in government, I'm assuming by principle are not your issue. What is it about the way this agency was constructed and operated that makes it so toxic to you?
Look, if I want to give Elizabeth Warren credit for anything, I thought the idea, the premise, at least the stated premise, was a good one, which is to take all of the consumer protection elements out of the other financial regulators and consolidate them in one place. So it's a one-stop shop for consumer protection. We didn't do that. What we did instead is just simply layer another level of regulation on top of the stuff that was already there and became duplicative in many ways. Then, in large part because of the way this entity is funded directly from the Federal Reserve, not from Congress, it sort of felt like it didn't answer to Congress, and they were able to do whatever the leadership wanted. And during progressive leadership, they did things that I believed were against the law. I'll give you a specific example. Dodd-Frank, which creates CFPB, specifically says that CFPB has no jurisdiction over automotive dealerships. But under Richard Cordray, the Bureau went after automobile dealerships anyway, despite the law. There's lots of examples like that. So I think it was a renegade agency. I think that they're having the right discussion now to sort of say, look, let's shut the doors, figure out what's going on. They're still paying everybody. They can't fire anybody to try to see if they're actually serving their statutory purpose.
Well, Mick, you made an important point there about the funding structure, that this is funded through the Federal Reserve. It's not money appropriated by Congress, even if the agency itself was authorized via an act of Congress. So is there a distinction you draw here between these efforts at the CFPB and what's going on, for example, at USAID, which has run into problems in courts because that is congressionally appropriated money that they're trying not to spend?
It's a great point, Kaylee. And what I tell people is that, when Liz Warren created this agency, when she was a Harvard professor, she dreamt up the idea. She wanted something in her mind that was above politics. Consumer protection in her mind was too important to trust to elected officials. And you had to have this dedicated funding source so that the funding couldn't get turned on or off depending upon who was in Congress. She did that. The double-edged sword of that is that when Rohit Chopra is running the place, and Congress wants to shut them down, he can sort of go and get his money without having to worry about what Congress thinks. But the other side of the sword is if Russ Vought is running the place and he doesn't want to draw any money down from the Fed, he doesn't have to. So even if Congress wants him to spend money, he's really a benevolent dictator on his own over the CFPB. And so you're seeing the other side of this equation when he says, look, I'm not drawing any money. I'm not going to spend any. What's your next move in the court system?
Funding, of course, is one thing, Mick. If you wanted to eliminate the agency, would you need congressional approval for that? And will Donald Trump essentially just zero out, as you said, the budget and let it sit there and wither, or does it need to be closed with the authority of Congress?
This is what we struggled with. I did not believe that as the director, I had the right to shutter the place. I thought the president probably had the right to tell me to shutter the place. My guess is that's what they're doing this time. If you really wanted to, axe the thing entirely to make it cease to be, that would take an act of Congress. But I think it's up to the president and the director, again, as this quasi-benevolent dictator, to determine the scope of what the agency, the Bureau, does. And that could be a really, really, really broad scope like under Richard Cordray or Rohit Chopra, or very, very narrow under myself, Kathy Kraninger, and now Russ Vought.
Well, I do wonder where this would come down on the congressional priorities list, Mick, considering the legislative priorities of the president, tax policy, energy and border policy, trying to get it all through the budget reconciliation process. Doesn't seem like it's making much progress forward, at least in the House. Mike Johnson had suggested we could see a budget markup this week. Now he's suggesting maybe it won't be on that timeline. Lindsey Graham is trying to move first in the Senate. How do you ultimately see this going down? Is it going to be 2 bills instead of 1?
Yeah, but it's going to be whatever it takes to pass. And I think this focus on 1 bill versus 2 bills, of course, I think President Trump had it right. He came out and said he wanted 1 big, beautiful bill. And then the next day said, I don't really care as long as it passes. And I think that's what this is.
I guess the question then, Mick, is can 2 bills pass this House of Representatives?
The better question is, can 1 pass? So, I mean, take the simplest look. The way it's going to work, you know this, you've been around long enough to do it. You're going to have 5 or 6 ideas. You're going to have taxes, you're going to have immigration, you're going to have deregulation, a bunch of stuff. And then you're going to sort of throw them together and say, okay, if we add 1 more thing, do we gain net votes or do we lose net votes? And they're going to keep adding and subtracting different big pieces of the puzzle until they figure out a way to get a majority plus 1 in the Senate, in the House. That's the way this is going to shake out. Honestly, it's going to be hard to pass anything. It really, really is. There's deep divisions within the Republican Party about how much money they want to save. Other folks just want to spend it. And what the priorities are between immigration, taxes, et cetera. It's going to be very, very difficult with a margin of, what are they down to this week? I think 2, maybe 1, depending on who got confirmed in the last 48 hours. It's going to be hard to pass anything. That's why I say look to the Senate, because I think they'll probably start driving this discussion on that side of the building.
Wouldn't be the first time that happened, Mick, and it's not the first time that we're hearing threats of a government shutdown. I've only got a minute left here, but both senators from New Jersey went on Sunday morning television to threaten a government shutdown. We're going to run out of money on March 14th in protest of what the DOJ is doing and what the administration is doing to gut, in their words, federal agencies. Is this finally it? We shut down in March?
You know, you forget that I was the one who tried to coin the term Schumer shutdown back a couple of years ago. It didn't stick at the time. But if they want to try and do this, that's fine. Look, if the Democrats want to go to the mat because of DOJ, we welcome that as Republicans. Even if Elon Musk is not popular individually, the stuff he's turning up is solid gold material for us, for midterm elections, for presidential elections. People don't like what they're learning about how their money is being spent at USAID. And I don't care if they're progressive or conservative for the most part. So, yeah, let's have that discussion. If the Democrats want to go to the mat on this one, I think the Republicans would welcome it.
Wow. I think that was a bring it on.
Yeah, sounded like it.
Mick, it's good to see you. Mick Mulvaney back with us, former acting White House Chief of Staff, longest business card in Washington. I'm Joe Matthew alongside Kaylee Lines. This is Bloomberg.
It's 121 on Wall Street. We do check markets all day long here on Bloomberg. We have got the S&P 500 index gaining on this Monday. Back to work Monday, post-Super Bowl Monday, up 42 right now, up 0.7%, light volume. The Dow up 148, up 0.3%. The NASDAQ Composite Index up 224, up 1.1%. And the 10-year, 4.48%, with the 2-year currently yielding 4.26%. Right now, the price of gold surging to a record $29.05. First trade today above $2,900, up 1.6%. West Texas Intermediate crude also gaining up by just about 1.9% right now, 72.36 a barrel. And Bitcoin up by 2.2%, 97,285 though. Bottom line, gold at a record up 1.6%. Microsoft under investigation from the French antitrust authority amid concerns the U.S. tech giant is degrading the quality of results when smaller rivals pay to use Bing technology in their own search engine products. Microsoft up by 0.8%. And Meta platform shares, they are now lower, a little changed. They have been higher in the early going for a 16th consecutive session. But again, that winning streak may come to a halt today. We've got Meta shares trading lower now by just under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you very much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, the nation's capital, the seat of all three branches of the U.S. government, the executive, legislative, and judicial. Sometimes they work together, other times they check and balance each other as designed by the Constitution. And certainly we've seen the judicial branch specifically acting on a check so far of this administration in many ways. Judges blocking Donald Trump's executive order ending birthright citizenship, blocking this weekend Doge access to the Treasury payment system, blocking efforts to put thousands of employees at USAID on leave. And none of that seems to be sitting too well with the Vice President of the United States, who we should note is a Yale-educated attorney. He said on X this weekend, if a judge tried to tell a general how to conduct a military operation, that would be illegal. If a judge tried to command the attorney general and how to use her discretion as a prosecutor, that's also illegal. Judges aren't allowed to control the executive's legitimate power, Joe.
It's like a dystopian Schoolhouse Rock you just put together there here in the seat of power. Yeah, District Judge Paul Engelmayer, New York, an Obama appointee. This is really playing back like 8 years ago, right? 18, 19, in fact, Democratic state attorneys general start this up. Then you have the ruling from the judge who says there's some merit to the state's arguments that the administration has crossed legal boundaries here and goes back to giving access to sensitive Treasury data to the Doge. You've got people walking around inside this agency wearing T-shirts and jackets that look exactly like Elon Musk. There's something to behold here. And there's like a dress code at the Doge. It's a whole different story that we're talking about. And our panel surely has thoughts on this. As we wait to hear from Donald Trump in the Oval Office, Jeannie Shanzano is with us, our Democratic analyst and political science professor at Iona University. Ashley Davis, Republican strategist. And I want to get this right now, S3 Group, where Ashley is a new partner. It's great to see both of you here. Jeannie, I'm not sure your thoughts on this because it doesn't seem to be Congress on the front lines of fighting this battle. Will this all be decided in the courts?
You know, it might, Joe, you forgot to mention their backpacks. A lot of focus on the Doge lads' black backpacks along with their attire. So we'll add that to the mix. You know, there's really three buckets that would check the executive. And obviously, it's the first branch, which at least as of yet hasn't stepped up. The third branch, which just really started stepping up in concert this weekend. And then also the voters themselves. And we may see that down the road, but certainly haven't seen that yet. So at this point, it does look like the courts. And what we're hearing, J.D. Vance, as Kaylee said, you know, this a lawyer by training with the best education, he's mimicking something that Andrew Jackson said back in the 1830s. You know, John Marshall, you want to make your decision, now you can enforce it. And of course, that's what we've known since the founding, is that the court has zero ability to enforce its ruling. It depends on the executive to do that. And so this sets up a constitutional clash. We've seen it before, and it sounds like rhetorically it's something they may be banking on seeing again out of the executive branch.
Yeah, it's an excellent point, Ashley. It is the president who is the enforcer of laws, the executive branch. It is the judicial branch that is the interpreter of law and whether law is consistent with the U.S. Constitution. So when J.D. Vance says judges aren't allowed to control the executive's legitimate power, isn't it up to them to determine what legitimate power the executive actually has?
Yes, and I think that you're going to see a lot of different legal cases on this. And also, just as we were talking earlier, this is one of the only mechanisms that the Democrats have, especially with their Democrat appointed judges or elected judges for some, that to kind of stop this train that is like going down the tracks as fast as it can. I think that one of the main things that everyone needs to remember is that I don't know if the Trump administration cares if the courts continue to do this. They're going to move as fast as they can, put things in place as much as they can, and just let it ride out in the courts. And it's going to take years and years and years by all this time all this stuff is appealed. So I just don't know. I think, again, if I was a Democrat, I would be using this 100%. I just don't know how impactful it's going to be besides some of these delays.
We were just talking about this with Mick Mulvaney, Jeannie. Some Democrats are preparing to act and look no further than the two senators from New Jersey, Cory Booker and Andy Kim, split up and went on different Sunday morning shows to threaten a government shutdown to protest Donald Trump's gutting of federal agencies. Mick Mulvaney, when we posed this idea to him, basically said, "Make my day." Donald Trump is finding solid gold, are the words that he used, in making the case line by line as to why an agency like USAID should be defunded or at least rethought. Is that smart politics to hold up a government funding bill over this?
Yeah, I mean, part of the problem here, you nailed it, Joe, is that the Democrats are all over the map. You've got some who are really standing up. I think of the senator from Connecticut, hair on fire. We've got to do everything we can to stop this. And you've got more recalcitrants, say Hakeem Jeffries having to lead the group in the House. So Democrats have to get it together on this. Something I say all the time is, yes, you can use the courts to try to stop political movement forward, but it is a political disaster. We saw that in the 2024 election. Democrats, to the point that was just made, have a habit of doing this. It is not advised. If you want to win politically in this country, you have to appeal to the hearts and minds of the American voters, not unelected judges in courts. So that's the first piece of advice. And the second is holding up the government and shutting it down. That should be on the Republicans because they are in control. But Democrats have got to get it together and not let the Mick Mulvaneys of the world, quite frankly, he's very good at this, saying that it's a Schumer shutdown because, again, politically, that's a loser for them. So Democrats have a lot of work to do on this score, but there are a lot of solid arguments for them to make on this. And they just have to get together and make those. And what we saw the other weekend, quite frankly, at the DNC meeting, them talking about transgender issues, all these things, they are far afield from where they need to be talking to the American public. So they have some work to do on this front.
Well, on the notion of a Schumer shutdown or a Democratic shutdown, Ashley, that is the party that would get the blame. How does that work when Republicans are the ones who are in control of both the White House and Congress? Would they not shoulder any of the blame if this happens in mid-March?
Yeah, I mean, you would think, I would think so. I actually was having this conversation over the weekend, and how do the Republicans and Democrats kind of win the PR message, which is a horrible thing to say if we all think about it, if this is how we're running our country. But because Republicans are in control of all three branches, this should be 100% down around their neck in regards to responsibility. However, if the Democrats don't at least look like they're coming to the table to negotiate, and then they just can't agree to the government funding numbers based on difference in policies, then it's really hard for Republicans to blame it on them. If they sit back and just say, you know what, I'm mad because USAID funding's going away or whatever, that's not going to work. And, Trump's a brilliant messenger, and he'll start trying to make this all their fault. So I do think they're going to have to split that balance of negotiation, at least looking like they are.
Senator Andy Kim on NBC, Jeannie, I would be the last person to want to get to that stage referring to a shutdown. But we are at a point where we're basically on the cusp of a constitutional crisis. Is that how you look at this? And is that the way Democrats should be framing it?
That is what they're hearing from their base. I mean, what we're hearing, the calls coming into these offices are coming fast and furious. And, we're only 3 weeks in, but wait until people start to feel on the ground the impact of these kinds of actions by the executive branch. And even Republicans in the House and Senate are going to feel it. We had Kristi Noem on Sunday saying she would advise the president to shut down FEMA the way it exists now. That impacts people on the ground. It's going to take a while, but it impacts people on the ground. And you can bet their senators and representatives will hear that. Well, the Andy Kims of the world, the Chris Murphys of the world, they are already hearing from their constituents. And that's why they are talking in this way. And it's not just voters. If we go back to the CFPB, Elon Musk has talked about wanting a payments and commerce platform. What about the other companies that he now has an advantage over, because he presumably has got proprietary information about those companies now, having been in there all weekend before the judge shut that down? There are also going to be companies that say, hey, wait a minute, the executive has gone too far. And that is what is going to turn this around. I'm not sure that it works for Democrats to keep crying, crisis, crisis, crisis. But they do have to talk to people about what they're feeling on the ground. And there will be real impacts to all this action eventually.
So is this something that is going to be felt beyond the Beltway, Ashley, or at least outside of the bubble here in Washington? I do wonder. It's hard to see outside the bubble sometimes if this is actually a very insular conversation that most of America may not be paying that much attention to, frankly.
I completely agree with you. I mean, I wonder how many people in North Dakota even understand what USAID is or Doge is or whatever. I mean, or paying attention to it, because what they are worried about is the price of their eggs or the price of their rent or, everyday expenses. And so this question was asked yesterday to the president as well, is where are we on that? So yes, he is doing things fast and furious and things that he said he would do on the campaign trail that, isn't that surprising. I think the speed that he's doing it is what's maybe surprising people. However, I think that if I were the Democrats, I would be concentrating on the price of some of these groceries and things like that, instead of saying the sky is falling, as Jeannie used these words. I'm saying this, like the sky is falling on every single topic.
So maybe just more about egg prices. Ashley Davis and Jeannie Shanzano, our political panel on this Monday. Thank you so much for joining us. We'll have more Balance of Power straight ahead here on Bloomberg TV and radio.
It's 1:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ all advancing. S&P right now up 40, up by about 0.7%. Stocks kicking off the new trading week with gains, rebounding after a slide last week that was driven by concerns over inflation and tariff threats. The Dow right now up 127, up by about 0.3%. NASDAQ up 218, up by 1.1%. 10-year 4.48% with a 2-year 4.26%. Gold is up $44 the ounce, trading at a record $29.06, up 1.6%. West Texas Intermediate crude up 1.7%, $72.74 a barrel. BP shares are surging now by 7.4% after Elliott Investment Management built a stake in the company, seeking to end years of underperformance by pushing for significant change. ADRs of BP, again, higher by 7.4%. And Nissan Motor is eliminating a work shift at 2 U.S. vehicle assembly plants and trimming its hourly staff via buyouts. Those plants are in Tennessee and Mississippi. ADRs of Nissan Motor, they're down now by 0.9%. Recapping gold at a record, the Dow, the S&P, NASDAQ all advancing, S&P up by 0.7%. Balance of Power continues right now. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, thank you so much at World Headquarters in New York, the voice of the New York subway and Wall Street, always with us here on the fastest show in politics. Charlie, thank you as always. As we stand by for news at the White House, President Trump is expected to be signing some executive orders that had been scheduled, for 42 minutes ago. He still has not emerged. The press pool is standing by from what we understand, and this is important because we're anticipating some news on tariffs, 25% tariffs, as you've been hearing today and seeing on Bloomberg, against steel and aluminum imports. There are huge questions, Kaylee, about whether there will be some countries exempted from this, like, say, Canada, whether China will, in fact, be double tariffed. All that will presumably be made clear a little bit later on. He tends to have kind of the rolling news conference while he's signing with the Sharpie.
Well, and he indicated this may not be the only tariff-related announcement he makes this week, as reciprocal tariffs.
That's right.
May be announced Tuesday or Wednesday, he told reporters aboard Air Force One last night, and it's unclear how wide in scope those will be either. We have a lot of outstanding questions regarding tariff policy, though we do know, of course, that 10% tariffs on Chinese goods are already in place, and the retaliatory measures from China on U.S. imports to that country have kicked in as well. So we want to discuss the net effect of all of this and go now live to Capitol Hill, where Democratic Congresswoman Haley Stevens of Michigan is joining us, back with us on Balance of Power. Welcome back to Bloomberg TV and Radio. Congresswoman, when you consider your district in Michigan, and not just the tariffs that are in place, but the threat of tariffs going into place and potentially affecting costs that your constituents are facing, what are you hearing about this? What impact are you bracing for?
Well, I think it's very important to bring the American worker to the table on these decisions. And we all know that select tariffs can be utilized for the strength of the American economy, to bolster the pocketbook of the American worker, and to strengthen our supply chain. And we've seen previous administrations use tariffs. What we've lived through in the last couple of weeks, though, has been without the buy-in. And certainly those of us on Capitol Hill, we're just waiting to hear if we have a White House liaison over there at 1600 Pennsylvania Avenue. I had some constituents from Michigan in town last week, and we went to go log on to the White House and see if we could get them a tour, and they don't even have the portal open for members of Congress to give our constituents tours of the White House. So in terms of what they're going to put forward with all these executive orders and how we're going to work together, we want to be at the table for our constituents. We're certainly taking a lot of cues from those who've been in the trenches, like the United Auto Workers, certainly the United Steel Workers, and the like. And we know that other rounds of tariffs got worked out, but our supply chain, and particularly our automotive sector, it's complex. They need certainty, and they don't need this pendulum swinging from 1 minute we're going to see 25% tariffs on Canada and Mexico. Oops, that gets scaled back, or whatever we got out of that. And then you see what's going on with China. Maybe that does have some outcome for us. But we just need to know. We need to know, and we need some time to work this all out. And we're waiting on the administration to do that for us as well.
Well, Congresswoman, welcome back. I want to bring you back to your time as an employee of the Treasury Department. You were chief of staff on the Auto Task Force, which we talk about a lot, responsible for returning the auto industry to stability and preserving auto jobs back in the Obama administration. You know what it's like to be in that building, and you also know what it's like, as you said, to go through this complex series of stages to build a car in a place like Michigan, crossing the border back and forth between Michigan and Canada multiple times at various stages of assembly. That's not going to live through a 25% tariff if that ends up being the case. Donald Trump's got, I realize, a couple of months left to figure that out when you talk about Canadian and Mexican tariffs. Do car companies now, while they have the chance, need to start rethinking the way they produce these vehicles?
Well, I really appreciate you bringing up my time at the Treasury Department during President Obama's first term, Joe, because it was such a special time. It was a tough time. It was a very challenging time. But what made it special is that people came together for the betterment of our nation and our economy. The Bush administration officials, they stayed on, a lot of them at the Treasury Department. They worked with those of us in the Obama administration. We set up a nonpartisan team to rescue General Motors and Chrysler and 200,000 Michigan jobs. And certainly we weren't putting Elon Musk in charge of the wires to spook everyone that he has access to your data, which is also why last week, alongside our House Democratic leader, Hakeem Jeffries, I introduced the Taxpayer Data Protection Act. Now, you asked a very important question about what do our automakers need. And certainly their views and their declarations as proven original equipment manufacturers are going to matter a whole heck of a lot here. But I also know they don't want to pick a big fight with the administration out of the gate, which is why I'm taking my expertise as a member of Congress, as a representative from Oakland County, Michigan, where we've got Automation Alley and a lot of suppliers, and Stellantis headquartered, and certainly, you know, that strong affiliation with Ford and General Motors. And we're saying, wait a minute, guys, give us a minute here. We've got this USMCA framework. Why don't we use that? We're going into a review period. We're in a race against China with these rare earth minerals. I'm working on legislation for that, too. Maybe we could do something along the industrial policy lines like we did with the CHIPS and Science Act, which, by the way, has worked for the American taxpayer, has worked for the manufacturing economy. And so those might be some other things that we could consider together, both branches of government, as our founders intended.
Well, Congresswoman, I'm glad you raised the legislation that you introduced last week to rein in the ability of Elon Musk and those working for the Doge to access taxpayer information. I do wonder, though, if you really think there is appetite for that in your chamber specifically, if you're expecting Republican buy-in to this, or if ultimately it's going to be left up to the courts after a judge over the weekend did indeed, at least temporarily, block access to these systems.
Well, certainly, as someone who's not afraid to work in a bipartisan way, I'm not here to play gimmicks. And I'd say to my fellow House members on the other side of the aisle, Kayleigh, hey, come on over, right? I mean, think about the authority that we're ceding to the executive office when we also need to insert ourselves. And part of how we've gotten into these challenges with our debt and our deficit is that we also need to do a better job of doing our job as members of Congress. And that means taking hold of our authority. That means utilizing the legislative powers before us. And it's not necessarily I'm looking at it as I'm a citizen and an elected official who's concerned about what Elon Musk is doing at the Treasury Department. A little bit of transparency here would go a long way. And I understand the president's doing his press conferences and he is answering questions, but we really haven't gotten an answer as to what the heck they're doing in the Bureau of Fiscal Service, which I never had access to as a White House appointee and in a Schedule C role. Why does Elon Musk, who doesn't even have a top security clearance, and these conflicts of interest? And I just say that with all due respect. You have to understand, elected officials, executive branch, legislative branch, We hold the public trust. Let's continue to build it. And that's also what we're seeing that legislation can do. I'm here. I love our country. I want to work with our country. I want to deliver for the taxpayer. I want to deliver for our economy. And with that, hardworking Americans and those who've retired and those who are trying to raise their kids right now.
Well, let's get to it here, Congresswoman, because when you introduced that legislation, you wrote in your statement, it begs the question, what exactly is he, referring to Elon Musk, what is he trying to accomplish? Research on his opponents, you asked? Stopping payments on Americans' earned benefits like Social Security and Medicare? Is there something that you know about here, Congresswoman, that would indicate any of these are happening?
We don't know those answers, and I will tell you, it's just what I'm hearing from concerned citizens, Joe. It really is. The level of nerves that I have gotten from people back home in Oakland County, Michigan, it is really palpable. And I say that because I'm just trying to do my darndest as a representative and a purveyor of the truth, and as somebody who's got the power of the pen to write these bills, that we need those answers. That's all that is going to do here. This is a new thing for us. And look, we do need people digging into our government and helping us figure out how to get the best bills done and how to trim some of the fat and to make us more efficient. Gosh, that came up when I was working for President Obama over a decade ago. We really went through a whole exercise on that, particularly for small businesses and how challenging it is for them to work with the federal government on occasion. And so we really just want to build that trust, and we want to get those questions answered, and that's what I think my bill would do. Taxpayer data protection. All sides of the aisle are welcome to join in and sign on to it. We really love to have you.
Well, Congresswoman, if we're talking about trust in the federal government, what about trust in the government's ability to make sure, at least through Congress, that it is continually funded beyond the deadline of mid-next month? We've heard from some of your Democratic colleagues a suggestion that your party is not willing to play ball with Republicans over some of the very same things we're talking about, the efforts of DOGE, the operations of this administration. Are you willing to tolerate a shutdown to make a point on that?
Well, let me tell you this. I don't think there's anyone more frustrated in the Congress right now than the House Republicans, in part because they're finding out about these executive orders when the American public find out. They're not necessarily being brought into the objectives of this administration, and they're not having a lot of say in terms of what's going on here. I've made it really clear that as a member of the minority party in the House of Representatives, I'm going to use my vote and my voice accordingly. And I'm going to do so alongside the steady and incredible leadership that we have here in the House of Representatives from Hakeem Jeffries. That's absolutely essential. There's a lot of things that we have worked really hard for over a number of years that frankly have a lot of support around this country. I'm thinking about these new manufacturing facilities that are opening up in the clean tech space, that big competition we're in with the Chinese Communist Party. J.D. Vance came to Michigan and said one of those plants was table scraps. He's now our vice president. I can't look all those people, the hundreds of people just working on rehabbing that plant, I can't look them in the face and say that's okay. So if we're going into a budget where you're going to slash that, I'm not signed up here. Let's negotiate.
Could you look them in the face, though, Congresswoman, to get to Kayleigh's question and tell them that it's worth shutting down the government to make a statement here when it comes to the actions of this administration, for instance, getting inside the Treasury Department, USAID, and others?
Well, I certainly reject the notion that the Democrats would be responsible for a shutdown. I want to be really clear on that. We're really proud that under the 4 years of President Biden's leadership that we never shut down the government once. That's actually something that guy has under his belt. And I know he's not the president anymore, and that's going to fall to our commander-in-chief ultimately. He's the one signing the bills, and he's got the grip on the Congress with the party that he is in, and we've got a speaker, and they're saying this is a big old mandate, and if they are going to try and open up that door to working with us, we're all ears on certainly workforce initiatives, which truly meet that those incredible goals of the realized potential of all Americans, the STEM bills, science, technology, engineering, and mathematics that I've worked on for a number of years, from rural Americans to urban low-income Americans, making sure that they've got that pipeline to a good paying job. Let's have that conversation. Let's fund those programs. Let's not attack the National Science Foundation, the National Institute of Health. Let's build a government we can trust together.
Well, it's great to have you back. Congresswoman Haley Stevens, or should I say former Treasury Department official Haley Stevens of Michigan. It's great to have you with us, of course. Live from Capitol Hill, we'll have a lot more for you. Obviously, we haven't even heard from President Trump yet. He'll be holding forth in the Oval Office. And Kaylee Lyons and I will let you know what we learn on the tariffs and these executive orders, 5 p.m. Eastern, right here on Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very happy Monday, everyone.
Were you up late watching the Super Bowl? What's going on here?
That felt like I actually
fell asleep during the. It was kind of a sleepy game.
It was.
Until
I only tuned in for like little parts of it because as soon as I turned it on and saw what the score was, I was like, "This is kind of over, right?" And yeah, it was.
Yeah, it was kind of an interesting game. Sorry, it is a Monday, guys. It's Monday, February 10th. I'm Carol Massar along with Tim Stanhope. We're live on radio, TV, YouTube, Bloomberg Originals. Yeah, it's going to be that kind of a Monday. Hey, we do have those stocks rallying with big tech and materials leading the way. S&P hovering near a record. Gold hitting a record. We're going to talk about that a little bit later on. All in the back of renewed tariff threats. So it seems like investors taking it all in stride today.
Yeah, they're just shrugging it off because those tariffs are certainly top of mind. More are planned this time on steel and aluminum imports. We've seen this movie before. Who ultimately pays the business and economic costs?
Yeah, big important questions. We're going to get to that. Also, a long awaited Apple overhaul. It is finally happening. We're going to get to our own Apple guru, Mark Gurman. He's coming up a little bit later on.
All right, plus the big game is over, but spending big on stadiums is not. Yeah, there's a muni play in here, and we've got it for you.
And what about Coke's $7 billion milk bet that leaves Wall Street wanting more wins? Yeah, you know them for all their sodas, but yeah, milk, they're in it in a big way.
All right, Moo. First up, a check on the day's trade and top business stories. Here he is, Charlie Pellet.
You really did.
Thank you very much. Happy Monday. Lots going on today with the Dow, the S&P, NASDAQ, all very much in the green. Seems to be a theme today with the S&P right now up 46,066. That is a gain of 0.7%. Dow Industrials also advancing up 135, up 0.3%, and the NASDAQ Composite Index up 212, up by 1.1%. The 10-year 4.49%, the 2-year 4.27%. Spot gold at a record 29.05, where the precious metal stands right now, up 44.30 the ounce. That is a gain of 1.5%. Whole lot more on gold coming up right here on Bloomberg Business Week, but bears repeating, gold right now at 29.05 the ounce. West Texas Intermediate crude 72.16 a barrel, up 1.6%. Aluminum and steel companies ripping higher as President Trump plans to impose 25% tariffs on all imports of the metals into the country. Among some of those names, U.S. Steel up by 4.1%, Nucor up 6.2%, Cleveland Cliffs surging now by 18.7%, and among aluminum companies, Alcoa up 3.1%. Shares of Century Aluminum up 11.9%. Also, Kaiser Aluminum up now by 2.6%. Recapping, bears repeating, gold at a record 29.05 the ounce. S&P up 41, up 0.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. President Donald Trump planning to impose 25% tariffs on all U.S. imports of steel and aluminum, broadening his trade restrictions to some of the country's top trading partners and seeking to protect domestic industries here in the U.S. that helped him win battleground states last year, which made us want to know a lot more about those markets in the U.S., how much we import or export, and really, Tim, the cost of a trade war, tariff war here.
Okay, so we start with U.S. markets in steel and aluminum, and Bloomberg News metals and mining heavy machinery reporter Joe Doe, who joins us here in the Bloomberg Business Week studio. Joe, let's start with numbers.
Yeah.
How much steel or aluminum does the U.S. actually produce right now?
U.S. produces about 90 million tons of steel and nearly 3.5 to 4 million tons of aluminum.
Okay, put that into the context of what we use versus what we import.
We use about 90 to 100 million tons. So steel's kind of like made to order. Yeah. That's the way it works. Aluminum, not the same situation. We produce, what did I say, 3.5. We're consuming double that. But, 50% of what we consume comes from Canada.
Okay. You mean our trading partner?
Like our biggest trading
You
partner.
saw that Ontario ad yesterday during the Super Bowl?
Yeah, that's right.
Yeah, I was thinking to myself, when did they, put that into the mix?
Well, I thought it was an interesting mix overall. So what is the impact of these tariffs? So it sounds like, let's take steel first of all.
Sure.
Like, is it a problem?
Well, it depends on who you ask. If you ask the steel makers today and the service centers who buy the steel from them and sell to the consumers, they're going to say, no, this is not a problem.
Stocks are rallying.
This is good for our profits. We want more domestic produced steel. And so this will give us the runway to feel confident that we can make more mills or produce more and have hefty profits from doing so.
How quickly do we do something like that? I think about all of the, fracking craze and the drilling, and you go up to, the west of the United States. We're like, we've seen these boom and busts before. So how quickly, if that's the case, can you actually build out the facilities to ramp up?
Yeah, listen, if you're just building a new electric arc furnace now, which is your typical kind of steel mill in the United States, realistically, you're probably talking 2 to 3 years, depending on if you have any tie-ups. Like, making a manufacturing plant, like, it's not like, just like producing toys from Mattel that go on the shelf. Like, sometimes you start building a plant and, like, things go wrong. And there's only like 2 consultants you can deal with, and so it might take longer. I mean, we saw this with Steel Dynamics. They had a mill down in Texas that they spent years. It's fine. It's doing fine now, but it took a year or 2 longer than I think people were anticipating. I think the bottom line is, like, it's a 2 to 3 year time span. There are not a lot of plans right now to be building out a ton of new mills. There is obviously
steel or aluminum.
Well, definitely not aluminum, right?
Yeah.
So actual aluminum plants that make primary aluminum, there are plans, no plans to build new aluminum. There hasn't been a new aluminum mill plant built in the United States in 40 years. What they do build in the United States are something called re-rolling facilities, where they buy already made metal, they melt it down and turn it into products. We do have a couple of new ones of those coming online because, listen, there's really good demand in the packaging space and can making, and the automakers are always going to be on high demand. But listen, it's also not clear, like, what is the intention of the tariffs? I think the intention that Donald Trump's going for this time around is the idea of bringing more manufacturing back to the United States, or having others build new plants in the United States.
But as you mentioned, the timeline on that is not even close to overnight.
Right.
So could these actually accomplish that goal?
Long term, yes. And I know this is like a crazy thing for us all to think about, but in my world of metals and mining, where timelines are years, not months,
right?
They do say, listen, if we want a chance in certain production industries, we do need the timeline to say, yeah, we can do this in 3 to 4 years. If you put things like tariffs in place that give us the confidence that when the thing is finally done, we'll actually be profitable because the prices are going to be fair across the board.
Well,
that's what they argue.
FYI, in 2 years we have midterm elections, in 4 years we have another presidential election. A different president could come up and say, let's assume these tariffs last. Could say, no more tariffs. So, like, I'm wondering from a steel company's perspective, or someone who might create, go back to aluminum production here. I mean, how are they gaming this out to say, do we make the bets to do the build?
I mean, there are some really profitable steelmaking companies. Like Nucor Corporation is a great company. Steel Dynamics is a great company. They might be sitting there today saying, cool, this gives us the cover to feel confident on some of these other projects that we've had in the pipeline that we haven't talked about.
Right.
Do look like good bets going forward 5-10 years. I mean, I don't know for sure, but they could be having that conversation today.
What does it do to the steel and aluminum that we import to use?
Well, we're going to anger a lot of foreign producers. I mean, we import a lot of aluminum and steel from the United Arab Emirates, Brazil, Mexico, and Canada, right? Like, they're not going to be happy about this. They have major questions and concerns. And of course, buyers, right? They're going to have to pay more. If you're buying steel right now, which people aren't. There is no spot activity happening in the steel market right now. They're just taking contracted metal. Suddenly you're telling them they're going to be paying, what, $150 per ton more? They're not going to be happy about that. Inventories across the United States of steel right now are the highest we've seen in years.
Why is nobody buying it?
The demand's not there. Remember, interest rates are still high.
Right.
Costs are still high. The construction industry is getting absolutely torn up. And the construction industry is one of the great demand industries for steelmaking. So what, you're going to go and you're going to add these tariffs? It's not going to suddenly spur consumption in the construction industry.
That's what I was kind of confused about, the rally that we're seeing in all of these material stocks, the aluminum producers, because I'm just kind of like, well, wait a minute.
They've been really battered. They've been really, they're really battered. I mean, one of the major steel index, the S&P sub steel index, dropped by the most in 2024 since 2018. I mean, it was a terrible year. Interest rates are still there. Inflation is still a problem. And when you talk to these metal making industries, they're the bottom line cost, right? And so if their consumers are sitting there saying, yeah, just financing is way too expensive right now, we're not going to move forward with the project that we had in the pipeline, then, that's bad news.
Is this a commodity in the sense of the steel and aluminum you get from U.S. producers is the same as the steel and aluminum you get from producers outside of the U.S.?
Yes.
Do customers care where it comes from apart from price?
For the most part, no. Now, when you get into products, you get into very specific types of steel products and types of aluminum products, they do care because that is a value add. But if you're just talking raw steel making and primary aluminum making, I've heard this since I started covering this stuff 10 years ago. The Chinese do it just as well as the Americans. Everybody figured out how to make great steel forever ago. The chemistry's there. Yeah. Now, the steel makers will say, no, but our steel, this is an alloy, it is particularly better. But if you talk to actual consumers in the market, they're like, no. Like, maybe I like the buyer, who I'm buying from. I like doing business with them. But like the steel itself, like, yeah, they all pretty much do it pretty well.
How do you think about trade agreements and where we buy things like steel or aluminum from and what that means geopolitically and those alliances?
I think in 2016, we respected these alliances. It was part of the post-World War II union, of the world. The West kind of said, listen, soft power is important in these open markets, lead to more efficiency and better profits across the spectrum. But I think Donald Trump changed the calculus. And I think he took a page out of the steelmaker trade book, which is some people do cheat. They dump and they add, subsidies to whatever they're trying to sell. And in that regard, it is unfair. So today, I think that's where this conversation is now, right? Is like, well, do we care about the alliances? Sure. But we also have to make sure that things are fair on the trade level. That's the thinking.
One more context question. How big, in terms of number of employees or just size of the economy, what do we need to know about the steel and aluminum industries?
I think the best way to think of it is industrials. The industry part of GDP is 10% of GDP, right? So like when I'm sitting down on the weekends and I'm talking to my friends who are in tech or finance, like I'm a blip on the radar talking about steel and aluminum, but it is still a critical building block of the economy.
Is this a critical moment in time where things are going to change in terms of potentially aluminum and steel production in the U.S.?
I don't know. I mean, listen, he did this in 2018. We were producing 81 million per year. We're currently, or 82 million per year. We're currently producing 81 million. Nothing changed.
All right. Good to know. Some great context as always. Joe, thank you so much. Joe Doe, busy day for him. Metals and mining, heavy machinery reporter.
Joe Doe is so metal. I just wanted to say that.
Do you play, do you have guitar? Do you have a band? Do you have a metal band?
Piano.
All right, take it back.
Forget about
take it
that.
Back. He's not metal.
All right. You asked, though, about kind of the economics of this, and we want to stay with this subject and get into the possible economic impact on the U.S. of it all and how economists are reevaluating the impact of Trump's policies on the U.S. economy, warning that the risks to growth are front-loaded and rewards may not be visible to him until next year.
With that side of the story, back with us is Bloomberg News global economy reporter Enda Curran. He joins us from our Washington, D.C. bureau. Enda, good to see you this afternoon. Well, if we think back to the first Trump administration, there was also tax cuts and there were tariffs. This time there are tariffs without tax cuts. What do we need to know about that?
Yeah, it's the sequencing of the policy rollout and the pace and maybe breadth of the policy rollout that's unsettling some economists. I mean, on paper, of course, President Trump's agenda promises to unleash, the kind of regulation that holds back investment in infrastructure and extraction of resources and energy, for example. He wants to push through tariffs that are all part of a bigger game plan to create investment in manufacturing at home and create more jobs, and of course push through tax cuts to relieve households and businesses. But economists are saying that's fine on paper, but right here, right now, things are moving pretty fast on the tariff front. There was a threat of tariffs against Colombia. There was a threat of fairly punishing tariffs against Mexico and Canada. That came pretty quickly and surprised a lot of people because you're talking there about impacting a consumer goods basket. Think about the food and the veg that the U.S. buys from Mexico, for example. Then there are tariffs already in place on China, and they're new in the sense that they are across the board on all tariffs, not just, say, targeted for national security or targeted on intermediate goods. It's across the board, everything coming in 10%, and China has retaliated. And then, at the same time, we have lots of focus, of course, down here on the spending cuts, on the agency closures, on the federal staff layoffs being pushed through by DOJ, question marks there over when that ends and how it impacts overall. And we have deportation going on, which of course is another variable when it comes to the labour market. So you put it all together, a lot of economists are saying, okay, we get the positive agenda here, but right now this feels pretty bumpy and they're wondering how it all stacks up in the end.
I mean, and let me go there, and how difficult is it at this point to really kind of figure out the economic impact?
Yep, so obviously, absolutely right. We're at the start of the administration, so it's very early in all of this. But we are seeing some tangible impacts. Now, take, for example, the tariff debate, which dominates so much of the economic news right now. We have had the University of Michigan survey showing that consumer inflation expectations have risen sharply, and that's linked directly to the tariff story. And the tariffs, of course, being the threat of duties on the kind of typical consumer goods coming out of Mexico, less so from Canada, but certainly from China. So there has been an impact there. Secondly, we have plenty of businesses, importers, manufacturers, making warnings, making the point that these tariff threats are impacting, disrupting their supply lines, disrupting their plans for investment. They don't yet have certainty in terms of what will the duties be, what will be impacted, when and by how much. So there's a source of uncertainty there. And of course, beyond that, you have now these job layoffs in the federal sector and agencies. So there is some real world impact.
It's a lot of moving parts. You know, one thing I do think about, and I think about from your perspective, is we are a global economy, and what happens often in one developed major economy impacts others. As a global economic reporter, what's at stake for the U.S. if its neighbors or trading partners or global allies are hurt economically by these U.S. tariffs? I mean, what's at stake in terms of U.S. growth, global growth, and really then geopolitical stability?
Yeah, so the US has been the standout performer for the world economy over the past few years. Germany is in the doldrums. China's economy is sluggish. And when you look at the the observations from, say, the IMF, for example, they made the point that the US is the world leader for growth. It's driving the world economy. It's the reason it upgraded global forecast this year. So that's important in terms of supporting the overall world economy. Secondly, if we go down the road of the US getting involved in a kind of a tit-for-tat trade war with key trading partners imposing tariffs on each other's goods or other kind of restrictions, then obviously that will start to weigh on business confidence, business sentiment, business investment, maybe eventually employment. So there are certainly risks in going down the road of a hawkish trade policy. Of course, Trump administration says this will ultimately drive investment at home.
All right, going to leave it on that note. Yeah, certainly something to think about. That global investment, right, potentially here into the United States. Enda Curran, global economy reporter at Bloomberg News, joining us from our D.C. bureau. All right, folks, we're going to continue to watch any new news in terms of the tariffs, certainly any headlines out of Washington. In the meantime, we are seeing stocks, certainly the S&P 500, hovering near its highs of the session, so we're up about 45 points. It's good for a 0.75 percentage point move to the upside. Really the outperformers among those big cap tech names, NASDAQ 100, a gain of 286 points. It is up right now 1.3%. Speaking of global big tech, we're going to go there next.
Yeah, we've been waiting a long time for this one, Apple. It has to do with the iPhone, and also, you might have seen that ad last night. Not from Apple, but it's Apple adjacent. That's coming up next on Bloomberg Business Week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all pushing higher. Gold at a record. Right now, the S&P up 45, 0.8% higher. The Dow up 179, up 0.4%. NASDAQ up 228, up by 1.7%. Back to work Monday, post-Super Bowl Monday. Stocks kicking off the week with gains, rebounding after last week's slide driven by concerns over inflation and tariff threats. The 10-year, 4.48%. The 2-year, 4.26%. Spot gold, as I mentioned, trading above $2,900, $2,905, a record there, up 1.5%. West Texas Intermediate crude, $72.36 a barrel, up by 1.9%. Toronto Dominion Bank expects to raise about $14 billion through the sale of its entire stake in Charles Schwab, all part of a corporate overhaul. Shares of Charles Schwab today, they are trading lower on an update for the rest of the market. Schwab now down by 2.4%. And American Express shares down 1.7% after the credit card company said first quarter revenue growth will be lower than fourth quarter growth. Again, AXP, American Express down 1.8%. Recapping, stocks higher, S&P up 46, up 0.7%. Gold at a record at $29.05. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. All right, wait, could it possibly be that Apple's long-anticipated overhaul of the iPhone SE could be really, really here and very soon? Writing about it in his weekend newsletter, Power On Weekend Newsletter, and talking about how this could be one of the most pivotal years for Apple is Bloomberg News Chief Technology Correspondent Mark Gurman. He's out there in LA. Mark, good to be here with you. We all caught your newsletter over the weekend. Why is this going to be potentially a really big year for Apple?
You know, the backdrop is fairly interesting, right? You have iPhone sales, overall Apple sales down over 10% in China, right? One of their most important markets. They're way behind in artificial intelligence with Apple Intelligence and AI compared to competitors like Llama from Meta, ChatGPT from OpenAI, and of course Gemini, and how deeply integrated it is into Samsung devices, right? You have their form factor being behind the times at this point, right? They've used the same design for 5-6 years now, right? So you see from a technology standpoint, they're a little bit behind the competition from both design and AI. From a sales standpoint, they're lagging a bit from where Wall Street had anticipated they would be. So, you know, there's a little bit more to be desired from investors at this point, from customers, right, from technologists. And so this is a very pivotal year. This is a year where Apple needs to show that from a technology perspective, it's able to compete with the best of them. From an AI perspective, it's able to compete with the best of them. But they also need to compete at the lower end of the market. And that's why the iPhone SE is so important. The iPhone SE today, right, this won't be the case on Wednesday, but the iPhone SE today uses a home button, right? That's the original interface mechanism they introduced with the iPhone in 2007. In 2017, nearly a decade ago, they got rid of it with the iPhone 10, but it still hangs around in the lower end model. So they're going to replace that version as soon as Wednesday with the new iPhone SE that has an all-screen design, Face ID, and removes the home button. So a lot of consumers are looking forward to that, especially because I believe the price point will be around $500, making it a really solid entry into the mid-tier of the market, competing with some of the Chinese phone makers, right? We'll see what the China price equivalent is, along with offerings from Samsung and Google.